we have been starting on a soft note. It seems to have turned around a little bit as people really game out what the likelihood is of the U.S. getting involved in some sort of Iranian strike. Up 0.2% on the S&P futures. You're seeing that lift really continue in terms of 10-year yields higher on the heels of that risk-on type of move, 4.43% on that 10-year. And Brent crude, the contract you want to be paying attention to, given the fact that it was trading yesterday as well, and so it's actually a fair comp, lower by 3.5%, $76.06, as possibly the diplomacy could rule the day. Under surveillance this morning, Powell's biggest critic.
So we have a stupid person, frankly, at the Fed. He's a political guy who's not a smart person, but he's costing the country a fortune. So what I'm going to do is, he gets out in about 9 months. He gets fortunately terminated. Maybe I should go to the Fed. Am I allowed to appoint myself? I don't know. Am I allowed to appoint myself at the Fed? I do a much better job than these people. So anyway, we should be 2 points lower.
Here's the latest. President Donald Trump continuing his criticism of the Fed chair, writing on Truth Social, "Too late, Jerome Powell is costing our country hundreds of billions of dollars. He is truly one of the dumbest and most destructive people in the government, and the Fed board is complicit." Joining us now is former Kansas City Fed President Thomas Hoenig. I'm sure, Thomas, you don't really want to comment on that in particular, but it is important to understand exactly how the Fed is navigating this. Do you think that they're making the right decision in just being as plain, as boring as possible and holding on for the data?
Yeah, I do. I think they're doing the right thing. They're being cautious. There's so much uncertainty, as you all have talked about. There's geopolitical uncertainty. There's economic uncertainty. There's the budget that hasn't even been decided yet, which I think will have a big impact on the economy. And the Fed won't talk about that themselves, but that is being talked about. So there's so much. I think holding steady, and there's a lot of liquidity still in the market. I mean, my gosh. The government's going to issue $2 trillion in new debt. That's got to go someplace, but it's going to be spent by the government, and that's going to circle back. So I think they're doing the very wise thing, holding on, seeing where things are, and then making a decision when they have the right amount of information and they know where things are. And they use the tariffs as their explanation. That's certainly a legitimate concern for holding back. So is the budget process that's underway right now.
Tom, just between friends, nobody's listening. Did you find the meeting on Wednesday interesting in any way, shape, or form?
No, I didn't, except for one thing. I will say it was exactly as I expected, no change, the tariffs being the issue and so forth. But what I was disappointed with, there was only one question from the press about the budget, how that might affect things. And I think it's a bigger deal than that. So that kept it boring, and maybe that was intentional. I don't know. But I'm glad it was boring for the most part, but there's still a lot of questions out there that need to be addressed at some point.
We got to start a campaign to get you in the room with the media next time around. So the budget could be a bigger issue. What is the concern? Because it is one for now that sure maybe a little bit of a higher term premium for the bond markets, but the market hasn't been reacting that much. What are you looking out for as the big, beautiful bill makes its way through Washington, D.C.?
Well, it's kind of a delayed reaction, right? But this bill will add more to the debt, which is going to be, it's $37 trillion now at least. In 10 years, it's going to be well over $50 trillion. It's only going up. It has to be funded. I mean, that's what you're seeing right now. I mean, stable coins, the big talk is that's going to provide a greater demand for government securities. That's what they want. The fact that they want to exempt treasuries from any kind of capital standards, which makes the cost of capital to the largest banks no cost of capital for holding government securities, increases demand. So it's all about increasing demand for government securities, and that will eventually catch up with them when they're expending that much. And when that happens, you have to turn to where? To the Fed. Will it print more money? Will it engage in some kind of quantitative easing to make sure that the interest rates don't go up too high? These are all questions for the future, I realize, but they need to be thought of now, and they're not being I think, taken into account as much as they should myself.
So if they're not taken into account, and point very well taken on the attempt to try to drum up domestic demand for these treasuries, if that's all that's being done, and you don't have a real more serious discussion about the deficit, Thomas, how does it actually end? What is the actual trigger for action to be taken in Washington, D.C. to try to combat what has been a growing issue for some years now?
Well, if they're not going to do it in a systematic fashion, that means it will come up suddenly, and it's going to come up in two ways. As this debt continues to grow, two things are going to happen. The fact is that if foreign buyers don't increase a lot, that means they have to turn to domestic buyers. That means there'll be upward pressure on interest rates. Eventually, there'll be upward pressure. When, it's hard to know, but sooner probably than people think. That means there'll be enormous pressure put on the Federal Reserve to begin to buy this stuff. Otherwise, interest rates go up. And if they don't say no and make sure they're clear on why they're saying no, that means that they'll begin printing that money. Inflation is inevitable. Now, slow. And remember, it's not just price inflation, which everyone pays attention to. It's asset inflation. And that's what really has been a major factor in the last decade and a half. And I think it's something that will, worsen yet the distribution of wealth in the United States. And that creates unrest in many ways. Those are all bad things that come from kicking the can down the road a little too often.
Former Kansas City Fed President Thomas Hoenig, thank you so much for your thoughts, and maybe we will learn more in just 2 weeks. Coming up, Alex Altman of Barclays, Gerard Cassidy of RBC, Lauren Seidel-Baker of ITR Economics, and Deborah Cunningham of Federated Hermes, as we see markets turn around just a touch, futures a little bit positive ahead of the open. This is Bloomberg Surveillance.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like
100
hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me. Now we're playing.
Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
You survived the day?
I did. It was a busy day.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The Fed is in this really policy purgatory where they're unable to move because of the uncertainty ahead.
The key area to focus is on inflation expectations.
We may be underestimating what tariffs and higher oil prices could do to inflation.
The Fed is beginning to worry about their mandate being torn in the opposite direction.
This bad news has been really priced in for a while, so we think the economy can handle it.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. We're waiting 2 weeks for everything to see whether the U.S. will strike Iran's nuclear facilities, to see whether we get a trade deal, to see whether the U.S. will pass the tax bill. Danny Berger here with me waiting for the next 2 weeks. Actually, she's here for the next hour, which is a good and beautiful thing. John and Anne-Marie are both off today, like so many other people after the holiday yesterday. What I am struck by this morning, Danny, is that we are getting a headline reported from Reuters that Iran is ready to discuss limitation on uranium enrichment, and you're seeing markets respond.
Markets are really looking forward to and really pricing in any sign of diplomacy as soon as we get it. That's when we got the turnaround, a very liquid day yesterday with the U.S. offline, but to Trump saying that it would be the famous 2 weeks of discussion. But it seemed to suggest that diplomacy would be possible. Again, this is just another thing that kind of leans into that narrative. But Terry Haynes of Pangea has been arguing that talks with Iran constantly result in the same thing. They use it as a delay tactic and continue to develop nuclear weapons. Is that going to happen this time around? How realistic is it that Iran would completely give up their nuclear enrichment programs?
Which is a reason why any kind of rebound is tepid. It would be more significant if people really believed that this was the end of discussions. At the same time, this has been a market that has been benumbed by all of the potential worst-case scenarios that keep coming out to the fore and don't come to fruition. And it seems as though people are looking past that. You pointed out earlier, Danny, we're trading in the tightest range in months.
It's a really tight range for equities, for bonds. You can't say the same for oil. It's been bouncing around. In fact, oil has gained 20.5% so far this month. That would make it the biggest monthly gain since 2020. In that same time period, stocks are up just under 1%. Bonds are up 0.5%. There seems to be a disconnect between the assets.
Yeah, and part of the disconnect comes from what we heard from central banks and really around the world, which is a lot of them are looking through this. A lot of them are saying that this is a one-time shock. If anything, is going to weigh on growth more than really boost inflation. And we're seeing rate cuts around the world. We saw that overnight with Norges Bank. We saw that with the Swiss National Bank eyeing negative rates once again. So you wonder whether that becomes a theme as well globally. People looking past the inflation shock, looking more toward the potential hit to growth.
How much does a Fed on pause also allow for that to happen? People looked at the Fed decision saying 2 cuts, it's still really dovish. Neil Dedda pointing out how dovish can it really be? In fact, it was such a drastic split between the hawks and doves. If just one committee member had revised their 2 cuts to none or to 1, you would have had the average be 1 cut priced in. So there's a lot of wiggle room there.
Yeah, meanwhile, we are watching what's going on in the Middle East. Coming up the next hour, Alex Altman of Barclays with stocks stuck in that tight trading range, as Danny was talking about. Gerard Cassidy of RBC on changes to U.S. bank regulation, and Lauren Seidel Baker of ITR Economics on why she expects inflation to rebound. We begin this hour with stocks inflected slightly up as President Trump considers strikes on Iran, but we are getting some signs that maybe Iran is willing to take the diplomatic approach. Alex Altman of Barclays writing this: markets were given the opportunity to have a material negative reaction to this serious geopolitical escalation, yet we're met with a pretty benign risk response. Alex joins us now for more. Alex, wonderful to see you as always.
Nice to see you.
It is important to understand what the market is telling us by its benumbed reaction. What does that tell you in terms of traders' appetite for risk and their willingness to look through a lot of potential shocks?
I think we start with positioning. Let's just do that, because I think you can paint a very bullish scenario about the world. Despite what's going on right now, you can say that there's a lot of interesting developments with regard to 2026 growth, whether it's AI, so on and so forth. You can also paint a very bearish narrative, and I don't think we need to discuss that, but obviously the bearish narrative has moved around aggressively for the past 6 months, where there's been deficits and trade and tariffs and now obviously geopolitics. But positioning for me is a deciding factor, and the fact that, as you said yourself, the market hasn't really done very much in spite of, we had bad retail sales and we had arguably a very ambivalent Fed, and we've obviously had what's happened with geopolitics, and yet the S&P is up for June, and that to me is telling us positioning is still not particularly aggressive from an institutional client base perspective, and that's something that we can still build on over the next few weeks to the top side.
Well, it's not particularly aggressive to the downside or the upside, right? So why are you confident that it's going to flip to the upside rather than the downside in this sort of numb state?
Sure. So I think there's a couple things. First of all, we've got to think about AI, right? So from an AI perspective, what I was most surprised about is at the beginning of this year, most of the analyst community would thought that 2025 would be the apex year for AI capex. Now it turns out that 2026 is going to be even higher than 2025, and those numbers are still going up. We're talking in excess of $400 billion of capex spend in the AI space. That alone is going to add over 1% of GDP. And of course, the passage of time as we move closer to 2026, analysts are going to start having an eye on the 2026 forecast as opposed to 2025. 2026, we're already talking about numbers on a blended 12-month forward basis. The S&Ps are only trading again all of a sudden on 21.5 times. By the time we get to 26, we're trading on around about 20.5 times. So all of a sudden, we're not trading at a significant premium to the long-term average. And this, I think, is important, which people are going to have to keep an eye on. That's also going to anchor the S&P as we get closer to through the year.
But if it's AI that's coming to save the day, if it is these hyperscalers that keep spending, does that not get us back to where we were at the start of the year? That part of this narrative for ebbing American exceptionalism was the concentration of the market and the rich valuations of these players. Obviously, there was some politics in that as well. But if it continues to be AI, do we get back to a market where every day we look at it and say, oh no, it's just NVIDIA dragging us higher. It's just the Mag 7. Concentration is a problem again.
So that may well be the case. And obviously, we don't know what necessarily the world's going to look like 6 months from now. But I would say that positioning in that AI trade is a lot lighter today than it was in January, number one. Number two is that if you look at the performance of the Mag 7 versus, say, equal-weighted S&P, it's actually underperformed year to date. So there's room for that to become more extended as well. And number three, just think about the number of companies that have started to come out talking about the productivity improvements they're getting from AI. So Google talked about 10% improvement in their engineering capabilities. Microsoft said that they've got between 10 and 20% improvement in productivity from Copilot. Even companies like Volvo talking about improvements in their productivity in terms of manufacturing. These are just some of the anecdotes I can think off the top of my head. This is just the beginning, right? So I think there's a productivity aspect that really could actually propel the S&P up materially over the next few months.
But when you say productivity, I also think of job losses. Microsoft, we learned, is looking at firing folks because they can be replaced by AI. Andy Jassy sending out an email to employees this week saying something sort of similar. Does that also not have a dampening effect on the overall market? If you do see job losses because of AI, whether it's an excuse or not, and then increased demand because it adds to what already feels like a very fragile labor market right now.
I think that is definitely the potential, not left tail, but that is the risk of this AI narrative, is that the very thing that we get excited about ends up being the undoing of the very narrative. And we could already make the case that we're already seeing kind of peak employment within, say, the hyperscalers. A lot of these companies just don't look like they're going to hire anytime soon. And being a software engineer was the most coveted job in the world a few years ago, and it's questionable whether that's still the case now. Again, I just think that trying to predict too far in the future with these big structural trends is difficult. All I know is that if we look back through history, through these big seismic changes in technology, generally it's good for jobs rather than bad.
Do you buy that you could see U.S. stocks continue to outperform even with the sort of structural move away from the dollar and the fact that you are getting easing from central banks in Europe even as the Fed remains on hold?
So, I mean, there's a couple of things, right? So first of all, we've got to work off the assumption, okay, if U.S. stocks do go up, if we're right about that, and if, for example, we begin to see some kind of bid underneath the bond market, whether it's because of the upcoming QRA or whatever it may be, then if stocks are up and bonds are up, then isn't necessarily bad for the dollar. So there's that which we've got to consider first. The second thing is just look at the actual broader market in terms of how beneficial it's going to be for the narrative for investors in general towards this sort of direction. And I don't know, I just think that we're in an environment where it's very easy to be bearish and it's not that easy to be bullish right now. I think most investors we talk to are not particularly bullish at this particular juncture. And I think that in itself is just not just from a contrarian perspective, just think about the general positivity that I think that actually can be outlined. I think is actually the natural direction for risk right now.
So let's put some numbers on this. Just how overweight are you to the United States, and how much more bullish have you gotten over the past, say, 3 weeks, as you haven't seen those significant moves in response to geopolitical shocks?
Well, if you remember, at the beginning of the year, we were pretty negative on the US. So we were out there sort of touting the end of US exceptionalism. And I feel like that narrative played out pretty well. Now I think we've got to the point where actually there's a lot of investors have begun to move money out of the US. But at the end of the day, if we go back to that AI story, there is only one region that you can invest in to get AI exposure. And so do I think it's the end of US exceptionalism? I do not think that's the case. I think even if you were to make a case that the end of US exceptionalism to diversify internationally, corporate exceptionalism here is still very much here to stay. And I think that's what global investors have kind of realized, that if they want to be involved in the AI trade, they've still got to be putting money to work in the US.
Well, there's also an element where 40% of companies are getting their exposure from abroad in the US too. So even if you just want international exposure, are there really other options besides US large cap stocks? Is this kind of also the trade to say, you want international exposure, you can still stay in the US?
There is definitely a degree of that, yes. I mean, at the end of the day, when people try to make these comparisons between, say, the S&P and like the GDP and like market cap being out of whack, they forget that the S&P is a global index. I don't think that really sort of detracts from the fact that some investors will want to diversify to non-US equities. That is what we've seen so far in 2025. Europe has been an interesting story. We've been very bullish, for example, on parts of LATAM. There's parts of parts of Asia that also are pretty interesting here. But the fact of the matter is that if you are a large asset manager with a large pool of capital, the US is still going to be your primary choice just because it's the most deep and liquid market and the best capital market in the world still.
Alex Altman, thank you so much for being with us.
Thanks.
Always great to get your thoughts on this. Alex Altman of Barclays joining us here in our New York studio. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. The White House says President Trump will make a decision on whether to strike Iran within the next 2 weeks. White House Press Secretary Caroline Leavitt says the president's goal of preventing Iran from obtaining nuclear weapons remains intact. She added, though, that if there's a chance for diplomacy, the president is always going to grab it. Meanwhile, Canada is opening the door to increasing tariffs on U.S. steel and aluminum next month if their trade talks with the White House stall. The U.S. has placed 50% tariffs on foreign steel and aluminum, while Canada has 25% counter tariffs in place on the U.S. And Hurricane Eric weakened to a tropical storm after slamming into Mexico's South Pacific coast as a Category 3 storm yesterday morning. The storm made landfall near popular tourist areas, including Puerto Escondido and Acapulco. At least one person was killed in the storm, which caused landslides, blocked highways, and downed power lines. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Up next, the morning calls, plus Gerard Cassidy of RBC on changes to U.S. bank regulation. That's coming up next. This is Bloomberg Surveillance.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Futures turning around as you get some positive reporting about a possible diplomatic solution. Reuters citing an unidentified senior Iranian official as they talk about a willingness of Iranians to potentially limit the uranium enrichment. We will bring you more on the story as we get it. S&P futures up about 0.1%, yields higher, 4 basis points higher for the 10-year, 4.4%, and an ongoing decline in Brent, down more than 3% on the heels of that news. Time now for the morning calls. First up, Wedbush lifting its price target on IBM to a street high of $325. Analyst Dan Ives saying IBM is under-owned and in the early stages of an AI renaissance. Next up, Jack in the Box downgraded to hold at Stifel, saying U.S. immigration policies will weigh on already deteriorating sales. Those shares lower by about 1% in pre-market trading. And finally, Mondelez upgraded to overweight at Wells Fargo, saying its bull case for the snack food giant is becoming more tangible. Those shares up about 0.5%. Turning now to financials, which have been one of the better performers that we have seen all year. U.S. bank regulators planning to lower a key capital requirement for the biggest lenders in an effort to ease constraints on trading in the treasuries market. Joining us now, very happy to say, Gerard Cassidy of RBC. Gerard, thanks for being with us. This story moved markets. It sent a bid into the long end of the Treasury curve, and it raised a question. If the regulations were lifted, would banks want to buy long-duration Treasuries as part of their trading operations?
Thank you for having me on the program, Lisa. The short answer is no. I think you touched on it in your opening comments. The primary driver for relaxing the standards of the supplementary leverage ratio known as SLR is to ease up the stress that happens on the balance sheets of the primary dealers during volatile times. And so by lowering this ratio, it's going to give them expanded capacity or greater liquidity to be able to trade these securities during that volatility. That's the primary purpose, rather than the banks going out and buying 30-year treasuries for their portfolio. Not to say that may not happen, but that's not the primary reason for changing this legislation or changing this regulation.
Gerard, how much is this important to you, though, for another reason? The idea that if this does happen, it indicates the quick pace of deregulating the banking sector really is underway and gives fuel to the narrative that really has driven a lot of the performance in financials year to date.
Very well said, Lisa, because you're absolutely right. One of the real tailwinds and positive trends for the banking sector and why we remain bullish on the banks is what you talked about, which is deregulation. When you think about July or summer of 2023, when the initial Basel III endgame proposal came out, the expectation back then was that the capital requirements for all the big banks were going to go up meaningfully, very meaningfully. In fact, JP Morgan and Goldman at the time, if I recall, were talking about a 20 to 30% increase in capital requirements. That, of course, has been thrown out, and now the new proposal that we expect will be greatly watered down, and the capital levels will probably remain unchanged, but relative to what we had in summer of 23, it's meaningfully different, which means the banks now have excess capital, and I think what you're going to see is much stronger buyback activity amongst the biggest banks over the next 12 to 18 months.
Gerard, can you put some numbers to it? Just how much stronger could buyback activity become as this unfolds?
It's a good question, Danny, because when you think about it, the banks are very profitable today. When you look at the FDIC data for the first quarter and you annualize the net income, we're at record levels. And the banks are generating such excess levels of capital every quarter. And because we're obviously a mature economy and the industry is a mature industry, they cannot put it all to work to grow their organically because there's just not enough demand. So they need to do something with this excess capital. Acquisitions is certainly something they'll choose to do. And that's another area, by the way, which is likely to pick up its speed in the second half of this year because of this deregulation, but then buy back stock. And so when you look at the peak levels of shares outstanding of the top 20 banks post-financial crisis, what you see is that many of the biggest banks have been actively buying back their stock. For example, Goldman Sachs, their shares peaked in the first quarter of 2010. Their share count is down 45%. Regions Financial, one of our big regional banks, their share count is down by over 35%. So I think what you're going to see is banks buying back every year, anywhere from 2 to 5, maybe even, 7% of shares outstanding if they have the excess capital and if growth, again, is modest.
If growth is modest, Gerard, part of the concern about some of this SLR reform and in general, the higher issuance of treasuries that we're seeing is that banks are going to be asked, I know you question this as just how much they will, but are going to be asked to absorb more treasuries. That brings it up the criticism that the banks become more of an intermediary between the government and its depositors versus its depositors and private corporations in the U.S. and corporate America. Is that a real change that could happen as there's more supply, that the money flowing to fund and loan to corporations in the U.S. is lessened just because of the amount of government debt that needs to be absorbed?
It's a really interesting question because when you think about it on the surface, you would have to certainly be concerned about it. But when you listen to Treasury Secretary Bessent, he has obviously been very vocal about getting the banking industry more involved in the U.S. economy. This administration knows that to grow out of the deficits we have, we need to engage the banking industry more so in lending into the U.S. economy. So if they were to pressure the industry to buy more government securities, as you point out, that would certainly have an impact on growing the U.S. economy. So again, I'm hesitant to, and I don't believe that's going to be the pressure point. The real, the force is let's get the banks involved in the economy, grow the economy so that it'll lessen possibly the deficit and the problems we have with government debt in this country.
Gerard, let's put the Treasury story aside for 1 second. One of the other tailwinds for financials so far this year has been this belief that we will get some sort of M&A resurgence, and we really haven't seen it. There is a feeling that maybe the second half will be more robust, and yet we have gotten some predictions from the Bank of America as well as from JP Morgan executives who've come out and say they do expect mergers, acquisitions, deals in general to be less active than they previously expected. How much do you think this is a hit to the narrative that really has driven some of the upside in these shares?
We certainly are expecting more bank M&A, and when you look at overall M&A, it's not just the banking sector, but when you talk about all the sectors, it's been more muted this year. Obviously, April was a really quiet month, so M&A activity in general has slowed down. But let's come back to just the banks. And when you look at the banking sector, Lisa, as you and I have chatted over the years, we used to have 18,000 banks and thrifts in this country in the 1980s. We're down to about 4,600. So the consolidation of the industry has been ongoing for decades. And the reason we expect it to pick up is that what we're going to see is that with the regulators being supportive of M&A, in the prior administration, they weren't as supportive of it. It's going to give the potential buyers more confidence that they can announce a deal and have it closed within, let's say, 6 months versus 12 to 18 months, which was the case in the prior administration. Plus, I think what we're going to see for a renewal, Lisa, is activist investing. I think what you're going to find is for banks that haven't delivered for their shareholders, that activists could get more involved into their stocks. We haven't seen that in some time. Generally, it has not been successful. But what with this regulatory outlook being less, harder on the industry, I think they may be more supportive of activists to encourage this consolidation for the banks that are not delivering for their shareholders.
Gerard Cassidy of RBC. Thank you so much for spending time with us. Right now, we're seeing in markets turn upward. Futures up more than 0.1% on the heels of reporting from Reuters. Reuters reporting that Iran is ready to discuss limitations on uranium enrichment. They do say that zero enrichment will undoubtedly be rejected, especially now under Israel's strike. This is according to an official speaking to Reuters. And Danny, markets are responding.
Should they be responding? Okay, a slight response, fine. But just that last note that you said, that zero enrichment will undoubtedly be rejected. Trump has said he wants total surrender. We don't know what total surrender means, but it could be zero enrichment. So Iran has already said that that's not going to be an okay thing to be brought to the negotiating table. If anything, though, it does just put the increase of concentration of what's happening in Geneva. You have European powers meeting with their Iranian counterpoints. Is this the start to negotiations? Is this maybe what's behind Trump saying, let's have 2 weeks, maybe diplomacy can be achieved?
And this is the reason why some of the heat in the oil market being taken out after a more than 20% rise so far this month alone, as people try to game out what some sort of disruption to Iranian production could look like. We will continue the conversation coming up. Lauren Seidel-Baker of ITR Economics and Deborah Cunningham of Federated Hermes on inflation expectations and central bank responses to them. This is Bloomberg Surveillance.
Of investment agreements.
Deals were once again on display.
The Saudis are open for business. The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that none of the guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. In On Site with Haslinda Anim, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Welcome back to Bloomberg Surveillance. We are seeing a bit of a lift, a reversal from earlier this morning in futures, as there is reporting from Reuters that Iran is open to curtailing some of the uranium enrichment. Still limited gains, but still a market reversal from earlier, up 0.2% for both the S&P and NASDAQ futures. Russell 2000, really the outperformer this week for the first time in a long time, which is probably why they're outperforming, up about 1% right now, 21.49. When you trickle this through to the bond space, yields higher across the board, particularly at the long end. Now 5 basis points higher, 4.94% on that 30-year. 10-year yields up also about 5 basis points, 4.44% on the 10-year, and 2-year yields up a more muted 2 basis points, 3.96%. When you look at the crude market, that has been the most direct response that we have gotten from some of the back and forth about Iran and Israel and the U.S. getting involved or not. And you could see that reducing the temperature reduces the price, down 3% for Brent crude, $76.45. 1 hour away from the cash open. Here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. We got a flurry of movers this morning because of earnings. We start with Accenture. Those shares are down 5% after it posted a sharp drop in new bookings. They fell 7% in the quarter, and Bloomberg Intelligence says that it's a sign that discretionary IT spending by companies remains soft. And while Accenture did slightly raise its full-year outlook, BI says it was driven more by cost-cutting than a true demand spike in tech. Next up, we have shares of CarMax. Those are soaring up 9.8%. This is the largest used car retailer in the U.S., and its results were solid. It posted higher profit and higher sales in the first quarter. Not a surprise at a time when shoppers are, of course, trying to avoid tariffs. And, of course, one way of doing that is buying a used car. And we end with the company behind Olive Garden and Longhorn Steakhouse. That is Darden Restaurant. Shares are up 3.3% after sales rose 11% year on year for them in the past quarter. And that was essentially in line with expectations. But it tells us that consumers are still eating out amid all this macro uncertainty. Also getting investors excited is a dividend boost and news that its board has approved a $1 billion share buyback program. I'll pass you the breadsticks, Lisa.
Thank you so much, Yahaira. Talking about breadsticks, actually, retail sales showed that more people were eating out, and that was the greatest proportion of retail sales, of consumer expenditures, of the retail sales that we've seen on record. We got that data earlier this week.
It's not what you'd expect if it's a nervous consumer, if they want to save budgets. It's usually one of the first things that gets a pullback, so good sign.
Again, it's sort of, you can paint a good story, you can paint a bad story. Turning to how the Fed deals with all of this, Fed Chair Jay Powell saying tariff impacts are coming as policymakers wait for clarity. Bloomberg's Michael McKee joins us now. Mike, how much reaction was there to Wednesday? Was it just watching paint dry? And is that really the success?
I suppose you could call it that, Lisa. Nobody knows what's going on. Jay Powell made that clear. And numbers just out now show the Fed's dilemma. The Philadelphia Fed Business Outlook Index falls to -4 from stays at -4. The forecast was for an increase to -1.5. But the interesting thing is that the new orders index drops a lot, employment drops a lot, but so does prices paid. So are we getting inflation or not? That was the centerpiece of the chairman's testimony I want to say last week. We're all thinking this is a new week. Earlier this week, Jay Powell goes up to Capitol Hill on Tuesday. Can he top what he did? For excitement, he could, but can he find anything to say? He said the economy was still solid. The Fed left us with 2 dots for 2025. Unemployment and inflation will rise, Fed officials said, but Powell made it clear there is, quote, no great conviction on forecasts. In other words, don't take us very seriously here because we don't know any more than Wall Street does about what's going to happen. We'll get more people besides Jay Powell next week who will be talking a plethora of Fed speak. You look at what we've got. Mary Daly speaks on Sunday, then Waller, Bowman, Goolsbee, Kugler, Williams on Monday. Powell up on Capitol Hill to testify to the House Financial Services Committee. First day of his Humphrey Hawkins testimony. He comes back on Wednesday, Thursday, and Friday. Also more Fed officials, although some of those are just welcoming remarks. But we'll get enough Fed speak next week to find out if anybody is going to go beyond what Powell says and say, we are actually thinking this is going to happen, and we have some conviction on it.
The Fed speak making up for lost time. Michael McKeith, stay close. We'll get back to you in just a second. Lauren Seidel-Baker of ITR Economics writing this. Inflation will likely rebound in the second half of 2025, likely limiting the FOMC's ability to cut rates. Lauren joins us now. Lauren, how much did you see a Fed that really is waiting for a reason to cut and is likely to remain on the sidelines more than people think?
Yes, we're back to quote unquote data dependent, which it's a very interesting place for the Fed to be. They used words talking about the labor market as solid or healthy. At one point, Chair Powell said close to full employment, at or near full employment. So when you couple that with these rising inflationary pressures, both due to things like tariffs, maybe the war in the Middle East is simmering down a little bit, so we won't get that pull on energy prices. But we have very fundamental reasons that we are looking through to the second half of this year with higher price levels. That's fundamental, kind of boring, nerdy things like fiscal and monetary policy. We still see upward pressure on wage costs. So at the end of the day, with inflation pressures building, with the labor market still in balance, this is not the typical environment that we are talking about rate cuts.
So if inflation is picking up, and it does in the back half of the year, Lauren, just how weak does the labor market need to look for the dual mandate to shift back to it and allow the Fed to cut?
That really is the question. I don't see many fundamentals on our radar that would say weakening in the labor market, at least a significant degree. From a numbers perspective, we're very much limited in terms of our labor market, just the demographic trends, with Gen Z being a much smaller generation, certainly not sizable enough to replace all of those retiring baby boomers. Over the near to middle term, we do have just those numbers working against us in terms of how many people can we put into the labor market. So I would say demographics are the big driver here for that long-term swing in the labor market. And even today, where we have had material loosening from the tightest point of this labor market, it still is a rough balance, one unemployed worker per each available job opening. Historically, we typically have multiple job seekers for each job opening. So when we talk about balance, keep in mind, by a broad historic scale, this is still tight. And for most businesses, this still feels very tight and very hard to hire.
Just taking a big step back, Lauren, most people would look at that and have this worry, are we getting back to the 70s where you could see real wage price spiral of inflation because of the dynamics you're talking about? We haven't quite seen it to that extent. Maybe it has to do with globalization, the fact that there is cheap labor abroad and cheaper goods coming in. If we are changing to a world that's more multipolar, that's more insular, do we need to start worrying about that 70s dynamic over again?
There were some very different drivers in the 70s that I don't think will be repeated this time around. But yes, anytime we look at that globalization versus nationalizing, I think of it kind of as a pendulum, right? The pendulum swings one way, it swings back again the other. We were certainly swinging toward nationalism. So with tariffs in effect, I mean, that will cause some upside pressure on the goods side of the economy, especially with what we tend to import. Just where we have focused our resources, it's not on being that lowest cost producer. So this will bring new pressure pressures. I think there'll be slightly different pressures than our country has seen in the past. But coming back to those more elevated inflation levels, I don't think the 70s and 80s inflation levels are back on the table, but I'm looking at something more like the 90s, the early 2000s. That was significantly higher than the prior decade, pre-COVID. We saw very, very low inflation. So I think for both businesses and consumers, it's going to take a mindset change to adapt back to a very different environment.
Lauren Seidel-Baker of ITR Economics, thank you so much. One thing that we have seen is a tight trading year, tight trading range. The U.S. 10-year trading really in its narrow span, despite a busy week, including comments from Fed Chair Jay Powell. Bloomberg's Michael McKee is back with us. And Mike, I want to kind of surprise you and throw something at you, because right now we're getting some headlines from Chris Waller of the Federal Reserve, Fed governor, speaking on in another news outlet, saying that the Fed doesn't need to be on hold much longer and could cut rates as early as the July meeting. How out of the mainstream is he?
That would put him pretty much the farthest out on the hawk-dove curve as far as being dovish. You get results like the Philadelphia Fed this morning, where prices paid went down. If we don't see a big rise in inflation from tariffs over the next month or so, that could be a possibility. But I think it is definitely an outlier, Lisa, because at this point, the Fed doesn't have the data. So they would have to have some reason to move that hasn't shown up yet. The 10-year you mentioned is trading in a fairly tight range. We saw some volatility on Wednesday when the Fed first put out its dot plot. We saw the 10-year yield go down. And then on Wednesday afternoon, when Jay Powell spoke, it went back up again. And now today we're trading about where we were when the week began, a round trip. And it raises the question of who is right. The bond market seems to be siding with the president at this point and suggesting that the tariffs are not going to cause a lot of damage or a lot of inflation, and they're not going to send the country into recession because of the bond, the budget bill up on Capitol Hill. A lot of people think that that's going to be recessionary. It's going to create a big deficit problem, and it's also going to join the tariffs in slowing the economy. But at this point, the bond market doesn't think so, and people are wondering, where are the vigilantes at this point?
Michael McKee, thank you so much. On the heels of those headlines from Fed Governor Chris Waller, you are seeing the 2-year yield now lower on the day, 3.94%. It raised a question. If the Fed were to cut rates as soon as next month, how much would that increase yields on the long end of the yield curve, on 10-year, on 30-year yields, considering that people think this could potentially add to inflation over the longer term? Joining us now to answer that question is Deborah Cunningham of Federated Hermes. Deborah, what's your sense of the consequences for 10-year yields, for 30-year yields, if the Fed were to start cutting rates as soon as next month?
Well, it's still the expectations of tariffs hitting. Even if we go through the month of June, we go into the month of July with inflation actually lower, the brunt of the tariffs still are at least 60 days away. They keep being pushed out. You know, we said back in April they were 90 days away. Now we're 2/3 of the way through that hiatus with only minor, differences. So I think the 10-year and the 30-year remain cautious. I believe that the tight range that they have been trading in will continue. You know, I know the 20-year auction did not go well with last week, I think it was, but it's kind of an outlier. The 20-year doesn't have the same support necessarily on any given day as the 10-year and the 30-year. So I think both of them will continue to be in a range that's probably not more than 10 or 15 basis points from where it is today.
Deborah, you could drive yourself crazy trying to look out for something that shakes the market and gets it out of a range, from a one big beautiful bill to trade policy to geopolitical shocks and war. What is the bar to actually move this bond market at this moment?
Wow, that's pretty tough. You know, Michael was saying that it was, you know, a snoozer from the Fed meeting on Wednesday. But I think still, and I'll go back 2 meetings ago, the press conference where Chair Powell talked about, you know, in an answer to a lot of different questions.
Deborah Cunningham of Federated Hermes, thank you so much. We seem to have lost the connection. Everyone is going on vacation early, even people who are connecting the wires. Right now, what you can see in markets is a sell-off in the long end of the yield curve, something that I know that you picked up on as well, Danny, in response to this idea that possibly if Fed Chair Chris Waller ends up being Fed Chair Chris Waller come early next year, it could be a pretty dovish Federal Reserve.
I was going to say, the fact you're seeing a market reaction, I don't think is anyone saying, oh, maybe we'll actually get cuts in July. I think that's so far out of the consensus. You're spot on. What we are maybe seeing is Waller, the idea, maybe is positioning himself to be Trump's next Fed chair. So just how much more easy does policy get next year if this is the kind of language coming out right now?
And we're seeing that getting priced into markets with people looking at back-end cuts, right? The idea that you might not get any cuts from the Fed this year, but they might be much more aggressive early next year with a change of the guard in terms of who is the Fed chair. Just a reminder, what we actually got, Chris Waller, Fed governor, coming on CNBC saying that he doesn't think that the Fed needs to wait much longer to cut rates, and saying that they could cut rates as soon as the meeting next month, excuse me. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. The White House has scored a legal victory over its deployment of National Guard troops in Los Angeles. A 3-judge panel ruled the Trump administration can continue using the Guard to respond to anti-deportation protests. The decision, of course, is likely to be challenged by California. Meanwhile, American and United Airlines suspended daily flights from the U.S. to Doha due to the heightened tensions in the Middle East. Other airlines, including Delta, Air France, and Air Canada, have also suspended or even canceled routes to cities in the Gulf region due to airspace disruptions. And the NBA Finals are set for a decisive Game 7 after the Indiana Pacers held off elimination against the Oklahoma City Thunder. After a slow start, the Pacers pulled away in the second and third quarters, and they never looked back. They won by 17 points. It'll be the first Finals Game 7 since 2016, with tip-off set for Sunday night in Oklahoma City. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. And thank you for this morning. Have a wonderful weekend. It's going to be a hot one. Up next, setting you up for the week ahead. Plus, Bloomberg's Craig Trudell counting down to Tesla's robotaxi launch and just how long it'll take before we're being driven around by robots. This is Bloomberg Surveillance.
Bloomberg launches our inaugural 25 African startups to watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We integrated in every refrigerator a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. Welcome back to Bloomberg Surveillance. We are building on gains that actually started just a bit ago when Reuters reported that Iran was open to curtailing some of their refinement, seeing that near session highs now. Futures on the S&P up about 0.33%. Similar move for the NASDAQ. In the bond space, being affected by what Fed Governor Chris Waller said just moments ago when he was talking about the likelihood that the Fed could even cut next month, as soon as next month, saying that this was a Federal Reserve that should look through any potential inflationary impacts from the tariffs. Right now, you're seeing that in the front end, just 3.95%, still lower than before his comments. But on the long end, the same sell-off as people look to inflation. Counting down to the opening bell, here is the trading diary into next week. 11 a.m. Eastern, President Trump attending a national security meeting. Sunday, Tesla's planned robotaxi launch in Texas. Monday, we get June PMIs. Tuesday, we get consumer confidence. The NATO summit kicking off, and Fed Chair Jay Powell testifying before the House Financial Services Committee. Turning back to Tesla, its long-anticipated robotaxi is set to launch on Sunday in Austin. Joining us now is Bloomberg's Craig Trudell. And Craig, we were excited to hear that this could be getting closer to fruition because we both are thinking about the possibility of being able to ship people around without thinking about it. How much is this going to be a watershed moment for a really beaten-up company in Tesla?
I mean, it's a long time coming, right? Where, I remember hearing Elon Musk talk about how we were going to have 1 million Tesla robo-taxis on the road in the year 2020, right? And he said that in, I believe it was April of 2019. So this is something that he has long promised and long, struggled to deliver. It is a watershed moment if and when he's able to put cars on the road that won't actually have people behind the wheel. But I think, in terms of what we expect on Sunday, it is going to be, a far cry from even, what was promised back in 2019 when, Musk was talking about, a lot of cars being on the road capable of driving themselves. In this case, they're really keeping this to a small group of potential customers. They're sending out invitations to, I guess you could call them influencers, big Tesla fans and Musk fans that are likely to be, quite forgiving to the extent that there are any issues, any early hiccups. And, they're also keeping this to a contained area in one city with a handful of vehicles. So this is still, very early goings for them, and it's going to be quite some time before we get a sense as to whether or not this is going to be at all impactful to this company that, as you mentioned, is having a lot of challenges.
Fresh in probably a lot of people's minds, too, Craig, is October of last year at that We Robot event that Musk had, and there was a lot of disappointment. He rolled out a prototype for the Cybercab. There was also hope at that time that he'd have a cheaper vehicle. It wasn't there. Given how that event unfolded, what is the bar for this weekend? Just how much is the analyst community actually expecting, given some of the squishiness of prior timelines for Tesla?
Yeah, I mean, this is a company that is so divisive, right? Where you do have a lot of analysts who, despite all of the sort of unanswered questions and things that were left unaddressed at that We Robot event, some just kind of took the excitement of fresh metal, a prototype, got excited about it. And there was that event was successful in the sense that it drove this rally in the shares in the lead up to it. And we're seeing a repeat of that in terms of this robotaxi launch, right? Where despite the fact that Tesla's sales are not showing indications of market recovery from what was a really dismal first quarter, we're seeing the shares tick up just around this idea of Musk kind of driving a narrative again for the stock. And so even in the event that we don't see a real sort of needle-moving change in Tesla's what he's up to in Washington and about the demand issues and more about these bright shiny objects for the future.
Craig Judell of Bloomberg, thank you so much and have a wonderful weekend. Just to recap, if you are just joining, there are a couple of developments this morning that have shifted the tone in markets, albeit it was a pretty calm day to begin with, but right now we're looking at gains on futures heading into the open. We are about 35 minutes away, and we can see those gains near session highs as we look to Iran, ready to discuss limitations on uranium enrichment. This according to an official familiar with the matter in Iran who told Reuters. This is definitely affecting the mood, where you are seeing a lift across the board. The Russell 2000 getting the 1-2 punch from both this headline and from Fed Governor Chris Waller coming out earlier this morning and saying they could cut rates as soon as July, at a time when some people are wondering what the scenario analysis is going to be for a Fed unclear on how to handle the tariffs.
And he said we could cut in July, and then I think the direct quote was just kind of see what happens with inflation. I think a lot of the other FOMC members would not be happy with this idea, to just kind of see what happens with inflation. And that's some of the pushback, because you could argue that during COVID, they just kind of saw what happened with inflation, and then they were criticized for waiting too late. So there's some recency bias in there. Waller really standing out is very different from the rest of the committee. It brings up the question, how much of that is his audition for 2026?
Or anyone's audition for 2026 who will get that Fed chair job, given the fact that President Trump has been very vocal about his disapproval of Fed Chair Powell, saying he will not be in that seat come early next year. Will this be a Fed more inclined to cut rates come January?
The irony, of course, of that is that you see this market reaction being the reaction to that idea, which is the opposite of what the White House wants. They want yields to come in. They want demand for especially longer dated treasuries. But even just the suggestion of a cut has had the exact opposite effect.
Well, coming up on Monday, we'll carry the conversation forward. Lori Calvasina of RBC Capital Markets, former U.S. Secretary of Defense Mark Esper, Marissa Adams of HSBC, and Vinu Krishna of Barclays. Danny Berger, thank you so much for being with us. A pleasure having you here, as always.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for VVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
In case you missed it on Bloomberg Insight.
I just think there's a chance that you'll have stagflation. I'm not saying it's going to happen. I don't want the reader to say he's predicting this. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing. With all those things taking place, yeah, you may be surprised.
I spoke to Jamie Dimon. He says that we should actually prepare for stagflation. How do you square that?
I think there's no question that the shock of tariffs are stagflationary. The question is going to be ultimately how high do they settle at? Right now they're at a very high level, highest in 100 years, and how long a period both is this uncertain environment and how long are the tariffs going to last? And the question now is the magnitude of the stagflationary impulse, and we just don't know yet.
Don't miss Bloomberg Insight live weekdays.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jemana Versace in Doha, Qatar, and this is Bloomberg.
Getting a little bit of a lift today, 30 minutes until the start of this orphan trading day. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, muted moves, futures fluctuate, but looks like they're on their way up as investors prepare for a very unbusy triple witching event that could fuel more volatility. A $1 trillion pitch, SoftBank founder Masayoshi Son pitches TSMC for an AI mega hub in Arizona where American workers can build robots. And too big to ignore, some on Wall Street are making the case that Broadcom should be considered part of the Magnificent Seven, which would, of course, make it 8.
Right, you add 1 to 7, it becomes 8. We're going to talk about all of that and more, but let's talk about GMS, absolutely surging this morning as the building materials giant finds itself in a bidding war. Both Home Depot and QXO have reportedly made offers to GMS, which is currently valued at $3 billion. We don't know the value of the Home Depot bid at this moment, Matt Miller, but you can see traders bidding up the shares in a big way.
Right, Home Depot is a lot bigger than
Pretty
QXO.
big.
Car buyers are turning to the secondary market. CarMax used car sales jumped 9% year over year, and earnings per share beat estimates in a sign that demand is climbing as a result. The shares are up 9%. Let's kick it off with Detroit Bureau Chief David Welch joining us on this story. So I've long waited, David, or I'd say for a few months, to see used car sales really take off because new car sales are becoming so expensive, and now the inventory you're getting on dealer lots now is that inventory that's finally affected by tariffs, right?
That's right. Look, you're just starting to see new car prices rise out there because of tariffs. Some companies, GM is one of them, they've said that they don't want to put price increases in there, but other companies have, and they tend to be kind of sneaky price increases, or dealers just aren't as negotiating as much because inventory is tight, or you're seeing some rebates and other spiffs like that go away. That has a knock-on effect to the used car market. When people see their monthly payment higher when they're over in the new showroom, they say, hey, what do you have in the used lot? And you're starting to see that take effect now. What jumped out to be about CarMax, too, is, sales were up 9%, but gross profits for the used vehicle business were up 12%. So that tells me they're also getting better pricing over there on used vehicles. So, yeah, I think you're seeing prices start to tick up here because, hey, supply and demand happens, and the tariffs kind of there's a wide ripple effect there from what's going on.
Yeah, David, let's stick on pricing a little bit more, because not only did they not put through price increases, but you saw the average selling prices of used and wholesale vehicles fall about 1.5% and 1.7% respectively. So prices actually coming down here. CarMax making up for it in volume. But talk to us about sort of the daisy chain here. If you have new cars prices going higher, how long does it typically take to translate through into the used vehicle lots?
It can be months, but it does happen pretty quickly. I mean, it's just not, you can't have one without the other typically. And it's because of that shopping effect, right? So dealers start to get a little bit better pricing on the new car lot, and consumers react to it. The other thing you're going to see, I think, is, according to Alex Partners and some other forecasters out there, new car sales this year are supposed to dip in the second half as we see these price increases. And if people do need cars, then they're going to go look on the used side of the house. And so look, we're in June. I think you'll see used car prices start to take a hit, assuming the new car price increases go through, probably by like September is when I think you see it start to hit.
All right, so buy your used cars now. David, great to speak with you. That is Bloomberg Detroit Bureau Chief David Welch. Now, another company that was out with earnings this morning was Darden Restaurants. It's the owner of Olive Garden and Longhorn Steakhouse. It raised and posted earnings in line with expectations. It raised forecasts. It also authorized a $1 billion new share buyback program. Here with more is Bloomberg North America earnings specialist Rachel Flott. Rachel, great to have you on set. This is an interesting one because you see shares up 5.5% right now. I checked that and thought, oh, well, maybe the stock was getting crushed. No, this company is up 21% year to date, which is hard to do. So tell us what is going so right over at Darden.
So I think you can see the good results, particularly with Olive Garden and Longhorn Steakhouse. Olive Garden, which is obviously their biggest chain, about nearly half of their sales. You know, we see great promotions over the quarter. They had a buy one, get one free entree, which I think, which they said like helped to drive strong demand. They had great sales over Mother's Day. Now they have a $6 entree. So all these promotions are driving customers to Olive Garden. I think we also see that they also launched kind of like their deliveries with Uber like this quarter, and you know that's done well too, and that's kind of helped to push up their sales. I think in general too, you just see like in the casual dining space, you know, consumers are seeing that these brands are giving more value than fast food, which has kind of like increased their prices over the years. So you come to these casual dining restaurants, they give better quality food, they give slightly better portions, and so consumers are going there. I know Olive Garden, Longhorn Steakhouse, they also tend to draw more middle income and higher income consumers, which have been kind of more resilient during this economy. So, yeah, I think that's been helping their sales.
And their stock, as Katie points out, has been doing well, even though we have fears about the consumer. In this area, at least, it looks like the consumer is still spending, and that's been encouraging investors to keep piling into this stock.
Yeah, definitely. And, you know, I think a lot of analysts also kind of see that their guidance for the next, for fiscal 26 is actually pretty conservative. So maybe we can expect them to keep outperforming what the expectations are.
And let's not underappreciate the $1 billion buyback either. So a lot of rewards coming to shareholders here. And maybe the company's saying, we actually think the stock is too low. We're going to buy it back right now.
Yeah, 19 buys out of...
half of that money back. So that seems pretty painful. I mean, we also know Massa's not afraid to lose money on big bets. He's a risk taker.
That's true. That's true. All right, I think it is a fascinating story, and I'm looking forward to your program today because I'm sure that you and Ed are going to cover it well.
No, Ed, just me. So
just Caroline.
Well, even better. Caroline Hyde is anchoring Bloomberg Technology today, and she will cover that as well as the, let's just say, ugly glasses that Meta is now planning to follow up. I mean, the Ray-Ban Wayfarers are an absolute classic, right? And this HTNS or whatever the Oakleys are called, I mean, they're not even frog skins. Coming up, we're going to talk about more than $6 trillion in derivatives that expire today. It's triple witching, which we always say could make some difference, but never, ever, ever has.
It's like treasury auction.
We'll ask Charlie McElligott why from Nomura this is open interest.
Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Well, today is the quarterly triple witching event, and this could be the big one. Investors are bracing for $6.5 trillion of U.S. options to expire at the close today. That includes stock and index options as well as index futures. And this is one of the largest expiries on record. Could lead to more sudden stock market moves next week. I know Matt Miller is skeptical, so let's talk about it now with Nomura, America's cross-asset macro strategist, Charlie McElligott. He joins us on set right now. First off, it's great to see you.
Good to see you guys. Yeah, I mean, I was saying, we obviously have known each other for a long time. Matt, my, kind of evil twin brother.
Brother from another mother.
Been an inevitability, I would say.
It's a bit surreal being between the two of you right now.
Don't get confused.
Yeah, let me turn to my left and ask you about triple witching. You heard Matt Miller downplay it right before we started here. How much do we need to care? How much does the average investor need to worry about the fact that you have $6.5 trillion worth of expiry at the close today?
Nominal.
Nominal.
Matters.
I'm trying to sell it.
Okay. So when options expire, if they were to kind of assume expiring all at once, that's a bunch of gamma coming out of the market. And from a dealer perspective, that kind of removes hedging barriers, which then could kind of expand the range of outcomes. So I talk about a gamma unclench.
Yeah, tell us what that means.
A stock's delta is kind of like the options price sensitivity to change in the underlying. Gamma is the second order Greek on that, which is the rate of change with regards to the delta. Why that matters is I try to kind of qualitatively explain, dealer long gamma or short gamma, in the sense of it can act as an accelerant flow when you're talking about dealer short gamma. If dealers are short options, whether they're short calls or short puts, it can act as an accelerant to kind of amplify moves into the prevailing market direction. In this case, if you have a sudden loss of gamma, and recently, right, the calls have picked up a lot of delta, and there's a kind of an incentive to monetize, that's a de-risking flow. You could see that delta come off, the gamma is removed, all of a sudden we could flush down. That is a potential scenario. However, I think kind of the phenomenon that you were talking about with regards to, the skepticism where we haven't had those kind of expansive, range of outcome events around many OPEX of late, although we have a number of profile ones kind of on the record, has been the amount of vol supply out there, the amount of option selling strategies and AUM at kind of highs in those strategies.
We have to go to break. During the commercial, we can talk about Kappa Kappa Gamma and the Tri-Delts.
Yes.
Always been a fan.
Nice.
Charlie McElligott staying with us. We're right back with the opening bell. This is Bloomberg.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. Just 20 seconds to go on a day when we all probably should have taken it off. S&P futures right now up about 0.5%. NASDAQ futures gaining 0.6%. As Katie was pointing out earlier, we got some acceleration after
Chris Waller
on CNBC said maybe we cut as early as July. That was seemingly unexpected, and as a result, you see traders pushing futures higher. Here's the opening bell on the New York Stock Exchange. Blitz the barriers with Novartis ringing the bell there, and down at the NASDAQ market site, Carver Bancorp ringing the opening bell, and a bunch of very happy, excited faces down there. That's going to boost your mood on a Friday, right?
Yeah.
Seeing the kids ringing the opening bell. What stocks are you watching today, Katie?
Well, I have more good news, and that's if you're a shareholder of GMS, because shares are up 28.5% at the open right now. That's after the building materials giant finds itself in a bidding war. Maybe you have both Home Depot and QXO have reportedly made offers to GMX. QXO has offered $5 billion. A spokesperson told Bloomberg today that that is the final offer. You can see shares up now about, again, 28%. We don't know what exactly Home Depot's bid is, but looking at the market, odds are that it's pretty impressive, Matt.
Yeah, I mean, the thing is, QXO is like a $13 billion company, and Home Depot is a $350 billion company.
That helps.
So it feels like they have more heft. Car buyers are turning to the secondary market. CarMax used car sales jumped 9% year over year, and earnings per share beat estimates, and a sign that demand is climbing for the secondhand models as the new car prices just continue to climb. You can see CarMax shares rising 8% to just over $70 a piece. We are back with Nomura America's cross-asset macro strategist, Charlie McElligott here. And Charlie, in terms of just the big picture, the index, right? The S&P 500 just bouncing around that 6,000 level. We'll be above it now after the open, but just barely. What is this market waiting for? Is it the cuts that Chris Waller was talking about this morning?
That helps the cause, certainly, if it's for the right reasons. In this case, the messaging there is that, it's for the right disinflationary reasons, as opposed to a growth shock, growth scare type of reasoning. Then you might have very much the adverse effect. I would say that right now, and kind of the reason that we've gotten back to 6,000 from where we were just a few months ago, was this, general overfixation with regards to all of the left tail downside scenarios, right? Everybody understands the growth downside scenario, which was, tariffs, create a price shock, right? It impacts consumption. And then you kind of have two bad outcomes. This is the macro bear case, let's say. This is kind of stagflationary outcome, where the consumer then, is and their consumption is impacted, right? So fewer, lower top line sales. Or corporates, in order to support those sales, have to, take some sort of margin compression, eat some of those costs, and that leads to lower earnings. That's the macro bear case. I think one of the most important flows that's been lost when everybody's been so fixated on these left tail scenarios, and obviously, the President Trump kind of taco scenario has clearly mattered on the way back up, where you found his kind of put activated and the market is stabilized and the worst case scenarios have come off the table. But what has ended up happening with those, with this flow that I'm talking about is that, so with this corporate uncertainty too, right? Not just the consumer, right? What are we going to do with our, CapEx spending? Into this kind of uncertain corporate spending environment, right, where maybe they are going to dial back the R&D or hiring or that plan to build a new manufacturing facility. And what they're doing instead is that they're authorizing all-time high share buybacks. And that is the biggest flow in the market over the past 15 years by like magnitude of 8. So huge source of demand for stocks right now.
Well, let's talk about that a little bit more, because Darden, for example, Darden Restaurants out this morning, they had very good earnings, but they also authorized a $1 billion share repurchase program. And that just ties into what you're saying, that these buybacks have been an underappreciated fuel for this rally.
100%. And, the way I think about buybacks, and I view kind of everything through the lens of optionality, but the way I think about buybacks is that, one, they're shock absorbers. So into a market pullback, i.e. kind of the last 2 or 3 months of tariff kind of, vol events and headlines, they help absorb. They're most active into pullbacks. Otherwise, they're kind of this latent passive bid under the market, supporting the market, while simultaneously shrinking the float of shares. So it's this vol suppressor. And in fact, as I said, it's this huge source of demand, much larger than a lot of these kind of day-to-day changes that we talk about with, leverage ETFs or options dealer hedging dynamics, that has been a massively underspoken part. And it's perverse, right? Because the macro bear case is corporate uncertainty on spending. Well, this is what they're doing with that cash instead. and it's driving the market higher, and the macro bears are kind of scrambling with that dynamic.
By the way, you mentioned building new, plant and equipment. You can write all that off. Now, if this big, beautiful bill goes through, R&D, you mentioned 100% R&D expensing. There is some incentive, right, for businesses to do that, even in an uncertain environment. Do you see them pulling the trigger?
Well, look, that's part of the thesis, and the irony is that, folks expected Trump 2.0 to look like Trump 1.0. And instead, and I call him the human Vivix, right? This idea that he is, the volatility of volatility, and he says he has a mandate to disrupt the status quo, right? So the status quo was kind of the prior regime. Well, he's expanding the outcomes in both directions. But as the market has become conditioned to that Trump put activated on the lows, and then the market goes higher, and he, kind of ups his rhetoric again, you get this vol compression dynamic. But what also happened is the market started selling off, and we activated that put. Trump 2.0, which was, coming out of the gates with Doge and spending cuts on top of tariffs as sand in the gears of global trade, has slowly pivoted back to Trump 1.0, which is much more focused on deregulation, fiscal expansion, and obviously, this big, beautiful bill, which on the margin is stimulative and maybe more so than people anticipated, both with regards to the timeline of getting it done and also, too, the way that it's been constructed, which is, you pull forward the tax cut benefits earlier and see the spending offsets later. So on the margin, I think versus expectations, that has also created this kind of relief with regards to the, the fiscally stimulative, policies. And a big part of that deregulation, fiscally stimulative Trump is, of course, like unencumbering, M&A and deregulation and things like that to allow and facilitate for this type of investment.
Charlie, we don't have a lot of time left, but you mentioned leveraged ETFs, and I have to go there because when you think about all of the inflows, the billions and billions of dollars that are pouring into these double leverage, triple leverage products, there's a lot of wondering out there about what that means for the motion of markets, whether we're starting to see the tail that is these products wag the dog that is these actual underlying companies. In 45 seconds, what's your take?
Well, this goes back to what we started talking about, right? This idea, those products create a synthetic negative gamma effect in the market. So whatever the day's prevailing move is, they're going to feed into it due to their mechanical rules-based rebalancing at the end of the day. And with assets under management at all-time highs right now, and the popularity of those products, particularly across retail investors, each day is its own ecosystem, because those things are going to be forced to rebalance. And at the end of the day, they've been a huge part with those assets flowing into all, the highs and the bounce back here, a huge part of creating this, I need to buy more into the end of the day to stay hedged the higher we go. Hence, it's synthetic short gamma. The higher we go, the more they have to buy to stay hedged. Conversely, on sell-off days, they can amplify the downside move too. But into this rally, where the assets have grown, for every 1% move, it's like a 99.8 percentile amount of stock to buy historically versus what they've done. So they're also a huge part of this rally.
Charlie, it's always great to see you. I'm so glad we could do this. I think Matt is the evil twin, actually. Through the course of this interview.
Good cop, bad cop.
There you
We
go.
can do this again.
I think you got to have this guy on ETF IQ.
I think so. I have a lot of inspiration and ideas here. Charlie, have a great...
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back to Open Interest. It's time now for top calls. Some of the analyst action in focus this morning. And first up, stablecoin issuer Circle extending gains after being initiated as a buy over at Seaport Global. Shares were trading near the analyst's $235 price target, have since come down. Remember, this IPO'd at $31 a share, so It's just been amazing watching Circle in particular. But let's talk about snack giant Mondelez, because it was raised to an overweight over at Wells Fargo on bullish signs for the Oreo maker, despite record prices for cocoa. Shares up a little bit over 2%. And finally, we end with Apple getting raised to buy over at First Shanghai Securities. Analyst Peter Hand's $230 price target is a nearly 17% increase for this Magnificent Seven stock, Matt Miller.
Yeah, so analysts bullish on Apple, but they're bullish Broadcom as well. Its run is making it a contender to join the elite group of tech stocks known as the Magnificent Seven. Analysts expect the chip maker's sales, that's Broadcom, to jump 22% this year, another 21% next year. Meanwhile, Tesla sales are expected to fall. So could Broadcom replace the electric car maker? Here to make that case is Bloomberg's Carmen Reinecke. And I guess it doesn't have to, you could make it the Magnificent Eight, as we've been saying today, but Tesla is shrinking as Broadcom is expanding, right?
Exactly. So one of the reasons I even started looking at this was I just kept hearing people say, you know, Broadcom is really making strides. It's kind of having a breakout moment. Shares have rallied a lot this year. And this rally has brought it over $1 trillion in market cap, and it now actually is the 7th biggest stock in the S&P 500. And so the original idea sort of behind the Magnificent Seven was those 7 biggest stocks, and also sort of that they had this growth aspect to them, that shares are really having a huge run up. So obviously this year we've seen a little bit more of a split in the Mag 7. About half are up on the year, and then we have some really big laggards, Apple being one of them and Tesla being another. And sort of in terms of not just share growth, but revenue growth and the business expanding, Broadcom makes a lot of sense.
Yeah, you make a good point that certainly the Magnificent Seven haven't been trading as a block necessarily. There's a lot of bifurcation when it comes to that group. I suppose we could just start saying the Magnificent Eight, and that's how the change.
That's what Nancy Tangler does, right? From Laffer Tangler.
Yes. Yeah, I mean, you think about other acronyms, FANG, such as for example, it's really like this moment in time sort of phrase. And the Magnificent Seven, maybe to your point, that we're seeing more bifurcation, maybe that is just a sign of times that were.
Yeah, totally. And I think it's also important to remember that really these names, they're made up. They're things that we're using because they're quick and they're easy and we know exactly what we're talking about. But there really is been some expansion outside of that big 7 group, and I've even heard people talking about, you know, the big 9, the big 10. What, you know, should we include Oracle? Should we be talking about IBM? So yeah, there is definitely a shift going on, and you know, trying to come up with a new acronym, I guess.
I'm just looking through if you do an ANR function, analyst ratings on the Bloomberg terminal, analyst recommendations, you see a ton of analysts who are not buys on Tesla. I'm looking at like 30 who are not buys on Tesla. There are 23 who are not buys on Apple. On Broadcom, there's only 6, and they have 46 buy ratings. So analysts are super bullish this stock.
They are super bullish, and I think it's also important to remember that, you know, like sell ratings also come after record highs, right? And Broadcom was just at a record high right ahead of its earnings. So some of that isn't necessarily negative sentiment. It's just like, oh, maybe there's not a whole lot more room to run this year. But yeah, overarchingly, super positive and an interesting one to watch for sure.
Yeah, absolutely. Really enjoyed reading this article. I encourage everyone to go find it on the terminal.
They need a new ticker.
They
Why
do.
still Avgo?
Well, you know, we've got to come up with a new ticker for Broadcom, a new moniker for this group of stocks. So it's a long to-do list. Carmen, great to see you. Have a great weekend when you get there. That is Bloomberg's Carmen Reinecke. I will also note, if you take a look at the year-to-date performance of NVIDIA and Avgo Broadcom, they are neck and neck right now. NVIDIA up about 8.7% on a total return basis. Avgo Broadcom close behind with 8.2% total returns.
Right, NVIDIA is the only one of the Mag 7 stocks that is expected to grow in terms of the top line more than Broadcom.
True.
Which I now know because I read Carmen's story.
It's a good one. Everyone should go read it. Coming up, active ETFs now outnumber passive ones for the first time ever, but experts are skeptical of their staying power. We'll have that conversation up next. This is Open Interest.
your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Joanna Versace in Doha, Qatar, and this is Bloomberg.
This is Bloomberg Open Interest. Happy Friday. We've got to check on stocks for you that should boost your mood into the weekend if it holds. The S&P 500 is just over 6,000 right now, up 1/3 of 1%. The NASDAQ 100 gaining about 0.5%. Tech stocks are doing fairly well. Certainly the biggest of them is rising. Apple is up 1.75%. Microsoft is gaining about 1/3 of a percent. More news about layoffs at Microsoft. They continue to fire people. Now we're talking about the sales force. Darden Restaurants owns the Olive Garden. It's lovely. And earnings were better than expected. Plus, they've been doing well this year. So Darden Restaurants trading at $226 a share right now. Kroger up 6%. Obviously ahead of I guess it's not really a holiday weekend, but it kind of is a holiday weekend. If you were smart, you took this day off, and it's a 4-day. Kroger up 6%. These are the biggest point declines on the index. Eli Lilly off 3%, and Accenture down 8%, holding us back from further gains. Katie, what do you see?
All right, let's get to the good stuff because it's time for our weekly ETF report. And actively managed ETFs now outnumber passive funds, another sign of change in America's $11 trillion ETF market. Active funds have absorbed about 40% of overall inflows into the industry this year, which is a record share. So let's break it down now with Bloomberg Intelligence ETF analyst Athanasios Sarafagis. So I feel like we could have had this conversation about all these record inflows, these record fund launches this time last year as well. So Athanasios, what is going on? What is fueling this now, what looks to be a sustainable boom?
Yeah, it's just all about adapting, right, to the market. And like you mentioned, there's more active ETFs than passive. So the industry is just not synonymous with passive, low-cost investing anymore. Not to say that that doesn't still exist. It's just about what's the next area that issuers are looking to differentiate, stop competing with the behemoths like Vanguard. So even though we call it active, it's not traditionally active. That definition is a little fluid. It's not like picking. It's leverage ETFs. It's options. It's buffers. So it's basically just anything that's not passive will kind of go into that active category. But I think it's just more about where is there potential to make money? Where's there potential to grab assets? And it's not in the traditional low-cost beta stuff. It is in kind of outside of that box.
Yeah, I'm glad you made that distinction because, I mean, when we're talking about leverage ETFs, basically, these derivatives-powered ETFs, they count as active, even though, to your point, we're not doing old-school stock picking here. So the number of launches that we're seeing, now that you have active funds outnumbering passive funds, what does this look like on the other end? Is there enough demand to actually populate all of these different funds, or are these going to eventually turn into closures?
Yeah, that's a fair point. I think we'll definitely see some closures. I mean, we see it on the passive side, but I mean, the first starting point is you need the products, and then you kind of see if the assets will follow over. It's slowly moving over, so active is definitely getting attention. Of all the flows this year, almost half are going into one of these active categories. So you're seeing that there is some demand, but I agree with you. I think we might see some closures because there's just a lot of products. There's 4,000 plus ETFs. It's only going to get more competitive. There's only going to be more products coming. So, as we're on the passive side, we're going to see some closures. But I think that the demand is there, and this is why the issuers keep bringing these products at basically a record pace.
What's the next? I mean, when we get ETFs in 401ks, is that the next big milestone for this group?
I don't think so. I think what is happening, or which could be a big change, is this share class ruling that might happen this year. So basically, they can allow mutual funds to tack on an ETF share class. This will, if you think there's not enough launches now, if this happens, it's just going to be a tidal wave of ETFs coming into the market. But the 401k thing is another thing that could happen too. So there's only tailwinds behind the industry. So it's only going to intensify. We're only going to see more products. So everything is just shifting over to the ETF world.
Yeah, it's nuts. If we do that, get that share class approval, there's estimates that we could see thousands of new ETFs coming to market. So we're both going to be busy. That is Athanasio Sarafagis of Bloomberg Intelligence. Have a great weekend. Tune into ETF IQ on Mondays at 12 p.m. New York time. And great news, you can read all about the ETF industry in my weekly newsletter. That is Bloomberg.com/ETFIQ newsletter. Matt, I assume you subscribe.
I do, and that's why, to me, this was not really news, right?
That's
We were
great.
talking on the call this morning, and you were like, people don't realize that ETFs aren't all passive. And
They
I was
don't.
like, they should watch your show.
I agree. Thank you.
Great to get some time with Athanasios Sarafagis there as well. Coming up the next hour, Sarah Hunt says the spike in oil and the Fed's hawkishness puts investors in a tough spot.
We'll have to see over the next 3, 6, 9 months how the tariff discussions play out and what does it mean.
I do factor in some effects of tariffs now on inflation, on prices.
I like the idea of the 10% tariff across the board.
I've spent my entire career focused on fiscal discipline. I don't think these people have the foggiest notion what they're doing. And I think DOGE is doing tremendous damage to government.
Elon Musk is probably the inventor of our age, but who understands that we're in the midst of the most profound convergence among technologies.
When we are facing a once-in-a-generation technological disruption,
we cannot close this retirement gap without private-public partnership. We have to have good policy.
Do you think, Dawn, that the market is correct to be, as of now, pricing in 3 rate cuts in 2025?
I would take the other side of that bet.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. There's new violence reported on this 8th day of fighting between Israel and Iran as diplomatic efforts continue in Europe.
I'm Vicky Barker at the Foreign Desk in London. Iran's foreign minister is meeting his British and key EU counterparts in Geneva today, the first such face-to-face meeting since the start of the conflict. Abbas Araghchi has said Iran has nothing to discuss with the United States as long as the Israeli airstrikes continue, but that Tehran is open to dialogue with others.
President Trump says he'll decide within 2 weeks' time whether the U.S. will strike Iran. He says it hinges on Tehran giving up ambitions to assemble a nuclear weapon. Correspondent Ed O'Keefe is at the White House.
If they don't take the deal today, if they continue to sort of string along the United States, it's more likely then that by July 4th, the president's going to make a decision one way or the other that could involve potentially joining Israel in these military attacks.
Israel attacked more targets in Iran overnight, and a missile from Iran caused heavy damage near the site of yesterday's attack that hit a hospital southeast of Tel Aviv. Other countries are rushing to get their people out. This U.S. citizen arrived at the airport in Tampa.
While we were there, we were in shelter. We saw rockets falling. We saw missiles. The alarm was going on over at least 4 or 5 times a night. It's very, very difficult what Israel is going through. It's brutal.
Team management says it prevented federal agents from entering Dodger Stadium as crowds protested a decision outside to delay an announcement at last night's game on plans to help local immigrants. CBS's Carter Evans is there.
The Dodgers have a huge Latino fan base, and earlier this week, fan favorite Kike Hernandez weighed in on the immigration crackdown, saying in part on Instagram, "I cannot stand to see our community being violated, profiled, abused, and ripped apart."
Dangerous heat sweeping states from the central portion of the country to the east, and it'll stick around a while. CBS's Jim Krasula.
Phoenix, Arizona hit a record-shattering, staggering 117 degrees yesterday. People are trying to limit their outdoors.
I can't walk the dog. The dog's mad at me.
You just want to stay inside all day. You don't really want to do anything because it's so hot outside.
Much of the nation will suffer through 100-degree heat well into next week.
After 4 hours of emotional debate,
people won't be able to get to the fulfilled and natural death that they might have done otherwise.
A bill allowing assisted suicide for terminally ill people has just cleared a big hurdle in the UK. Lawmakers in the lower House of Commons have advanced the proposal to the upper House of Lords. Dow up 149. This is CBS News. Paid a pretty penny for memorabilia from the collection of the late movie maker David Lynch.
From TV's Twin Peaks, a script copy of the pilot episode titled Northwest Passage sold for $91,000. A group of 11 scripts for an unfinished film project called Ronnie Rocket brought in $195,000. Lynch's director's chair went for $91,000, and his personal 35-millimeter print of his debut feature Eraserhead sold for $52,000. Steve Kathan, CBS News.
A piece of heavy equipment that's been ruining tourist selfies in Italy for almost 2 decades is finally gone. A big yellow crane that hovered in front of the famous Uffizi galleries in Florence has been disassembled, once again allowing for unfettered views of Brunelleschi's dome. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience, streaming live on YouTube as well. Alex Steele is off today, but not to worry. Mike Regan. I mean, he's one of the top people in Bloomberg News, but I told him just a minute ago, he's no Alex Steele. But we will somehow, Mike, try to muddle through the next 2 hours. We got a lot going on. We got the stocks actually trading up here. We're going to talk to Dan Williams. He's a reporter for Bloomberg News. He's in Jerusalem. We'll get the latest reporting on what's happening there in that part of the world. Sandy Bragar, Chief Client Officer at Aspriant. We'll get her thoughts on the markets. Liz Hart, President of Leasing for North America, on the state of the commercial real estate business. And then we're going to check in with Ira Jersey. He's a Chief U.S. interest rate strategist. What did he take away from Fed Chairman Jay Powell yesterday in terms of where rates are going? So we got a lot to get to in the next couple hours. Again, markets are trading higher. Let's get a Bloomberg Business Flash with Mr. Trump.
All right. Thank you very much, Paul Sweeney. Happy Friday. The Dow, the S&P, NASDAQ all advancing. Do want to begin with a key headline just crossing the Bloomberg Professional Service. The American College of Cardiology is recommending that weight loss drugs be used earlier to prevent heart disease, particularly for obese patients, as exercise and diet may not be enough. The organization suggests considering Novo Nordisk's Wegovy and Eli Lilly's Zepbound as primary treatments to avert heart disease, which is the leading cause of death in the United States. Shares of both companies I mentioned, however, lower on an update for the rest of the market. Novo Nordisk, the ADR is down by 1%. Eli Lilly down by 3.5%. The Dow, the S&P, NASDAQ, they're all advancing right now, with the S&P 500 index up 13. That is a gain of just about 0.2%. Dow Industrial is up by 0.3%, now up 131, and NASDAQ up 38, a gain there of 0.2%. So the S&P 500 higher after 2 sessions of losses. The 10-year 4.41%, with the 2-year right now 3.93%. Gold is down $2 the ounce, down 0.1%. West Texas Intermediate crude down 0.2%, $74.95 a barrel. And a surge for Bitcoin, now higher by 1.3%. Bitcoin at 105,688 on Bitcoin. So stocks are higher today. Dana Dioria is co-chief investment officer at Investnet, and on surveillance this morning, she talked about reasons not to try timing the market.
If there's anything we're telling clients, it's this period of time validates the theory that you should sit still and stay with it and, not try to sell in and out of it. I mean, I think a lot of people coming off the Trump trade really sort of were empowered maybe to try to move money in markets, do timing. We know that the empirical evidence says that's not a very easy thing to do. It's not easy to make money that way. Boy, if you tried to time what was going on this year, you got yourself in a lot of trouble.
Dana Dioria of Investnet interviewed this morning on surveillance. Oil lower, oil stocks higher. ExxonMobil up now by 0.5%. ADRs of BP, they are gaining now, up by 0.9%. Chevron higher by 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. Mike Regan sitting in for Alex Steele. I'm Paul Sweeney. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Lisa Mateo. Lisa, what are you looking at?
All right, so I want to start with CarMax, ticker KMX. Their shares have been up as much as 3%, logged higher profit sales in the fiscal first quarter. Company sold more cars, and that was despite slightly lower prices, so it was offset by those higher volumes. Its CEO, Bill Nash, said that CarMax benefits from its customer-centric car buying, the selling experience too, so they say people like that. If you want the specifics, they posted profit just over $210 million for its 3 months ended May 31st, higher than a year earlier. Quarterly earnings higher than expected. Revenue rose 6.1%. Same store unit sales increased 8.1% from last year. Carvana shares are also higher because of that too. So we go from cars to restaurants. Okay, have you ever been to an Olive Garden, Longhorn Steakhouse, Capitol Grill? Maybe?
Yes.
Oh, Capitol Grill.
Bruce
okay.
Chris, yes.
Bruce Chris. There you go.
I kind of like the butter on on the steak at the Roots Chris.
Oh,
Some
the
people think
butter
that's a
on the
little cheesy.
steak.
I think that's pretty good.
No, it's delish.
Yes.
I know.
Yep.
I love it. They're all Darden restaurants, right? So
Yep.
ticker DRI up just over 1%. Slightly better than expected sales. Its earnings did edge down a bit. Said sales were higher because of a few things, a mix of growing same restaurant sales, but also they had sales from its purchase of more than 100 Chuy's Tex-Mex restaurants and 25 net new restaurants. So they had some sales there. Specifics, earnings of $303 million for the fourth quarter, slightly down from $308 million over in the prior year. And finally, we had stablecoin issuer Circle. We've been hearing a lot about them. Yes. So this is ticker CRCL, up about 12%. I mean, it soared 34% on Wednesday. The Senate passed a Genius Act. That's a bill to regulate stablecoins. So it basically sets up these regulatory rules for cryptocurrencies that are pegged to the dollar. And then on top of that, you had Seaport Global Securities. They initiated coverage of Circle with a recommendation of buy, and they like it. You know what? They say that the company is a top-tier crypto distributor. They say it has a sizable future opportunity, too. So some good news for the company there. As of the last close, the stock has risen more than 540% from its IPO price of $31. So
Mike,
an
what do you
interesting
make of that?
story.
I mean, unbelievable returns.
Yeah, I'm surprised that it's been such a hot IPO, to be honest. I mean, I think there is a ton of hype around stable coins. You know, they're ready to make that leap from sort of, you know, your crypto market poker chips to something being used in everyday, just regular retail online transactions. That's the hope surrounding it all. So
I want to see some more IPOs, Mike. You need to get your equities market. I'm going to see some more IPOs this year. Lisa Mateo, thank you so much. We appreciate it. Lisa Mateo, markets reporter here. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's get the latest reporting here, which is just a fluid situation. The latest reporting from the Middle East, from Iran, from Israel. Dan Williams joins us here. He is a reporter based in Jerusalem. Dan, what's the latest here? It seems like President Trump is maybe going to wait a little bit before deciding what role the U.S. may take. What do you hear there on the ground?
Absolutely. That's what the White House said explicitly yesterday. They even gave a timeline of 2 weeks, though it's worth noting they said within 2 weeks that decision will come, which strikes me as awfully elastic. Within 2 weeks could be 2 weeks from now. It could also be 2 minutes from now, in theory. So there could also be an element here of deliberate dissimulation, of a ruse, a smokescreen, if you like, perhaps even to serve operational secrecy should an operation be undertaken by the United States, an offensive operation as part of the Israeli offensive operations in Iran. Israel, for its part, and Iran, a week into this war, we can now call it a shooting war between the sides, I think that's pretty clear, are keeping up the fire. The Israelis saying they're still hitting missile targets, nuclear targets in Iran. The Iranians keeping up fairly regular missile salvos, including one that took place just about an hour and a half ago that sent the entire country, all of Israel, into shelters. 20 missiles in that one. We're told there were several impact sites. The Israelis have yet to say if there are any casualties. So the war continues apace.
Yeah, Dad, I'm wondering what just daily life is like on the ground for you in Israel these days. I mean, is there an attempt at business as usual and then, you know, hit the shelters when you get the alarms? What's it just like day to day living in this type of environment?
Well, not to be blithe about it, I think the best way to summarize it is COVID lockdown with ballistic missiles. Basically, much of the economy is shut down, places of entertainment, restaurants, supermarkets are still open, pharmacies. However, citizens are advised to stay close to shelters. And whereas previously they might have made do with what's called fortified rooms that every dwelling in Israel by law has had to have installed if it was built after the Gulf War of 1991, those are rooms that are meant to withstand nearby missile blasts. Many people aren't making do with that. They're actually going to communal bomb shelters, which tend to be in every town, in every neighborhood, where you literally go underground and share a space under lock and key. You lock a large metal door, you share it with neighbors, people, or even just passers-by who happen to have been stuck there when the sirens sounded. So, as I said, it does feel like a bit of a lockdown, and when the sirens sound, people move very quickly to take shelter.
Yeah, you mentioned Ethan Bronner, our Israeli bureau chief, has got a bomb shelter in his home. That's where he reports on many times. Hey, Dan, what is the realistic strategy or outcome for Israel here? Is it simply to neutralize Iran as a nuclear power, or is it something potentially more? Can they realistically think about regime change?
I think they've increasingly become voluble about the option of regime change. The Israelis said from the outset that this was not an explicit war goal. I think that's credible. Keep in mind that in terms of population, Iran, a country larger than France, is about 63 times the size of Israel. There's a distance of something like 1,000 miles between the two. Israel, for all its relative might, for all its ability and technological and political talent, I think that would be a tall order. But the Israelis have been saying that should, as a result of the destabilization brought about in this war to Iran, the fact that regime targets, military and increasingly governmental, have been hit, the fact that the military, the government, the state is being stripped of its military assets, and the jewel in the crown, if you like, which is the nuclear program, that could lead to a destabilization, perhaps encourage those elements in Iran that have long been opposed to the regime. Should it be toppled from within, the Israelis will not be shedding a tear. However, in terms of their explicit, immediate goals, one that they're trying to realize on a daily and hourly basis, it's the methodical destruction of the nuclear infrastructure there, all of the projects that they know of, and obviously of military assets, including the high command. They've killed a number of top-level generals, including the chief of staff, including his successor, only 4 days after he was promoted to replace the previous chief of staff. And of course, the missile assets. Israel argues that the fact that Iran has been able to fire these missiles and cause quite unprecedented damage in Israel just shows the amount of damage that it could have caused had it been allowed to pursue a greater missile program and perhaps launch them on its own initiative against Israel one day in the future, instead of what happened this time, which is with a surprise Israeli assault of exactly a week ago.
All right. Dan, thanks so much. We really appreciate it. Dan Williams, he's a reporter for Bloomberg News. He is based in our Jerusalem bureau there. So we've got full on-the-ground reporting from all over Israel. And that's been such a value to us, really, since October 7th and before that, but certainly since October 7th, and as this news continues to evolve. I guess, Michael, the latest is we're waiting to hear what decision President Trump may make as to the role, if any, of the U.S.
Yeah, it's certainly setting up for a pretty tense 2 weeks there for Dan and our colleagues and everyone in Israel and Iran. So
yeah, exactly. And I mean, you think about it, which we don't think about, but you know, the bomb shelters and where are you vis-a-vis access to a bomb shelter? I guess at all times, if you're within Israel.
Yeah, quite a way to live. And they're somewhat used to this type of environment. Yep. But this is
and I still see the planes when I come home from a late night trip. The plane in Newark going to Tel Aviv, to LL, and the kids getting on the plane. It doesn't matter what's going on in that part of the world, so it's really just an amazing thing to watch. We're going to have more coming up. This
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. We do check markets all day long here at Bloomberg, and this update is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. An up Friday here, holiday shortened trading week, but the S&P 500 index does remain just below 6,000, 5994 where we stand right now. That's a gain of 0.2%. We do have the Dow Jones Industrial Average advancing 170, up by about 0.4%, while NASDAQ is up 14 for the NASDAQ Composite Index, a gain right now of just about 0.1%. We're looking at a 10-year at 4.42%, with the 2-year 3.94%. Spot gold lower, little change, down 0.1%, and West Texas Intermediate crude also little change, down 0.1%, 75.03 a barrel. Gold, by the way, at 33.66 the ounce. Bitcoin up right now by 1.3%, 105,630 on Bitcoin. So again, recapping, equities higher with the S&P gaining 14 points to 59.95, up by 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. Michael Regan sitting in for Alex Steele. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. One of the, I think, arguably the greatest educational milestones in the United States is the University of California and the Cal State system.
Oh,
absolutely. I mean, they have
yeah.
educated like a gajillion people with great educations, and probably the prettiest campus is UC Santa Barbara.
Yeah.
And that's
some good surfing too.
Exactly. My son goes to Santa Clara University out there. He's in the surfing club. The whole scam. I mean, they go all up and down the coast surfing, and I see little charges. I'm like, all right, I don't mind paying for that. Sandy Brigger, Chief Client Officer at Aspiriant. She's in San Francisco, a proud graduate of the UC Santa Barbara. Joins us here.
Go Gauchos.
Actually, the Gauchos. And the UC Santa Cruz are the banana slugs.
Who's the banana? That's Santa Cruz?
UC Santa Cruz, the banana
right.
slugs.
Yeah.
Probably the greatest T-shirt of all time coming out of any university. Sandy, what are you telling your clients these days? If they were asleep for the first 6 months of the year, you could argue, hey, you guys didn't miss much. We're only up 1 or 2%. Bonds are giving you some good yield. It's been easy. What are you telling your clients these days?
I would be surprised if anyone was asleep for the first 6 months of 2025. But boy, would that be great. We are telling our clients, who are largely corporate executives, other professionals, family business owners, and entrepreneurs, to stay invested and to be very, very diversified. And when we talk about diversification, we're talking about not only bonds and stocks, but having liquid alternatives in the portfolio, even a bit of gold, which has helped out a lot this year, and digging within the equity portion of the portfolio, taking a very global approach is the right way to go. After many, many years of U.S. market leadership, we've seen some rotation into foreign stocks, especially European stocks, which we're really excited about for the rest of 2025.
Yeah, Sandy, I wanted to dive into that notion a little bit. You know, I keep hearing and seeing these headlines about Sell America, you know, the assumption that the tariff policies and this austerity policies in the U.S. will hit our markets a little bit harder than European markets. And to your point, you know, looking year to date, the European indexes are really outperforming here. Is that a theme that's going to last? Or is it just a matter of, to your point, just, you know, maybe it's time to diversify a little bit more into Europe than you would have otherwise?
Yes, I don't think selling America is the right approach, but certainly diversifying, if you haven't already, makes a lot of sense. In our portfolios, we're keeping nearly 50% of our equity exposure overseas, not only in the developed markets, but in emerging markets as well. And a lot of that has to do with the fact that valuations just look so much more exciting overseas. And we've had some softening of the U.S. dollar, which helps when you translate your foreign investments back into dollars, that helps boost the returns. So we see it as a long-term play. You know, usually there's a better sway between U.S. and foreign stocks, but for the last 15 years, we've seen U.S. market leadership. So the rest of the world has been overlooked for a really long time. So we think it is a durable way to go.
I'm guessing that allocation to overseas is a lot higher than it's been in, say, the previous decade?
We've been inching it up as valuations in the U.S. come up and overseas investments look a lot cheaper. But another thing to keep in mind is that with all the excitement so far in 2025, U.S. stocks are still valued very highly. They're priced to perfection, and that makes us a little nervous because we do think volatility will continue, especially over the summer. And summertime tends to be pretty mild in the markets. A lot of people going away on vacation, but there's a lot of reasons for some spice to be added this year with the tax bill on its way, things changing in the tariff world with the reprieve coming off, a appellate court decision later this summer. And then, of course, we have the truce between the U.S. and China trade being revisited at the end of August. So a lot in store that could cause some volatility, not to mention all the geopolitical activity and concerns that are hanging over everyone's head.
Sandy, talk to us about fixed income. I can sit there at a 2-year treasury and get darn near 4%, which is not a bad way to make a living. Or should I be taking some credit risk? How do you guys think about that?
So we're pretty bullish on bonds at this point because of that yield, especially on an after inflation basis. We think it makes a lot of sense. And we do like diversification within the credit exposure as well. Depending upon where we're placing bonds in the portfolio, we might be using munis to take advantage of the tax benefits there. The munis have had a harder time so far in 2025, but we're still bullish looking forward. And then if we're placing bonds in tax-deferred investments like retirement plans, then we're looking at a much more diversified mix of government credit and corporate credit. And we're not taking too much risk there, but we think times could change and it might make sense to go longer on the curve, depending upon what the Fed decides to do later this year in terms of rate cuts.
Yeah, so you think further out on the curve is, as Paul pointed out, those short rates are pretty attractive for the moment, but you think the longer end is the way to go?
Not quite yet, but we're looking at it. So yeah. We're definitely sticking to the shorter side for now. But certainly if we see some Fed rate cuts later this year, that could make all bonds even more attractive.
Sandy, how do you think about alternative investments in a client's portfolio? I remember speaking to some registered investment advisors, the RIA folks, years ago, and I thought their allocation would have been 5%, maybe 10%, but no, they were talking like 20, 25, 30%. I'm like, wow, that kind of surprised me. How do you guys think about alternatives as an allocation in a portfolio?
We think they're an important player. We might have up to 25% at different times. At this point, the highest allocation we're targeting toward is 18%. They make a lot of sense because they provide different correlations to stocks and bonds. And when bonds and stocks are highly correlated, and they are more correlated today than they have been, diversifiers can add a lot to the portfolio. But we wouldn't go more than 25%. And when we talk about diversifiers, we are looking at the liquid alternatives. They're mostly trading strategies that will provide some yield as they hedge out different exposures within stocks and bonds. And then we also throw gold under that hood too, which is a nice diversifier because of its lack of correlation historically to stocks and bonds.
Yeah, alts is a pretty broad category, so I guess gold is one of the places you find attractive. Talk about the hedge strategies you're talking about. Is that as simple as sort of a currency hedged ETF or something like that, or something more complex?
It might be currency, global macro, looking at merger and acquisition arbitration. There's a lot of different strategies. Some of our managers will go long one portion of the equity market and then hedge out and go short on another portion of it. There's a lot of different strategies that we sort of throw under the hood with our goal of having broad diversification as our main driving force within the portfolios. And that's performed very, very well. I think on a year-to-date basis, that basket of liquid alternatives is up around 6%. So really providing more returns than bonds and stocks so far in 2025, which is really nice to see and has provided a lot of relief to our clients.
Tom from the Upper East Side writes in and he says, ask Sandy about crypto. We've got Bitcoin at $105,000 per token. Is crypto, how do you discuss crypto with your clients?
So crypto is not part of our portfolios. Many of our clients dabble in crypto and they'll hold it in their side accounts, just a little bit because I think they like to talk about it at cocktail parties. From our perspective, at this point in time, it's hard to see crypto as an asset class that will provide value over time based on it not having such a big role in the economy or economic outcomes at this moment.
Sandy, thanks so much for joining us. Really appreciate getting your thoughts. Sandy Brigger, Chief Client Officer at Aspirient there in San Francisco. So I want to ask you, Mike, as a former banker, I look at a market that is near its all-time high. I've seen a handful of IPOs perform really, really well. How come I'm not seeing more IPOs in this marketplace, do you think?
Well, I think there's excitement about certain sort of categories. These crypto IPOs, everyone's excited about. As you point out, Bitcoin is as high as it is. I think for everything else, this volatility, as you know, scares a lot of people off. So if you're not sort of in an industry that's so buzzy that it doesn't really matter the geopolitics and the tariff risk and everything else, you're happy to do one. But otherwise, I think people are trying to wait this out, wait until we have a more stable market.
Do we have any visibility on the fall? Because a lot of times the calendars will fill up. People kind of take the summers off a little bit and then come back in the fall. Do we have any visibility on that?
Not total clear visibility. We know there's a lot of people on the sidelines waiting for that visibility to clear up. And, that could come in the fall. Obviously, by the fall, we'll have a better sense of the tariff impact of the rate outlook. And hopefully this Israel-Iran situation will be cleared up. So, I think it's people are pretty happy to sort of sit on the sidelines and take their vacations. And I think it's a pretty good guess that fall could be a bit of a pickup.
Earlier today, I threw Bailey Lipschultz under the bus publicly. He's a guy who covers all the equity markets and the IPOs. Then I was informed that he is actually in Tokyo with a little job swap. So I have to retract that. I apologize to my man because he's not on that beat at the moment. But that's I was just kind of thinking with it. Again, we've got a stock market at or near all-time highs. We seem to have kind of gotten past some of the worst of the uncertainty around tariffs, settled down a little bit to a new normal. We kind of have a sense of where earnings are going. And we've had a handful of really successful IPOs. So maybe that sets the stage.
Yeah, you still have that summer liquidity problem, especially for the retail that might be interested in some of the hot IPOs. So I think waiting for back to school season is a pretty good guess.
Well, I think, as it relates to the retailers, even during the sell-off, they were buying.
Very true.
They were buying big time. And we had, Eric Palchunas, who covers ETFs for Bloomberg Intelligence. He was saying, boy, the money just kept flowing into the Qs and the views. And the retailers, they were buying into the weakness. And that was a great trade.
They love to buy that tip. Yeah.
So
that's
good for them.
hard habit
To me, that was a smart money right there.
Yeah, and a lot of times this volatility from geopolitical flare-ups tends to be short-lived. So that historically has been a pretty good strategy, right? By the blood in the streets type of headlines. So we'll see if this one turns out to be the same.
All right, coming up, Liz Hart, president of leasing for North America at Newmark, get her thoughts on the state of the commercial real estate business. Stocks giving up some of their gains. We kind of got some red and the green on the screen here. The S&P's unchanged. The Dow's up 79, but the NASDAQ has rolled over. It is now down 28 points, so a little bit of volatility in this trading market. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P higher. We've got NASDAQ now in the red. This update brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to Commonwealth.com to learn how. S&P, as I mentioned, higher, little change right now, 59.81, up 1 point. We've got the Dow up 97, holding on to a gain of 0.2%. But since our last update, we've got NASDAQ low of the day right now, down 35, drop there of 0.2%. A post-holiday Wall Street session saw Treasuries trimming losses after Fed Governor Christopher Waller said rates could drop as soon as July. The 10-year currently at 4.41%, the 2-year 3.93%. Gold down $4 the ounce, down by about 0.1%, 33.66 on the precious metal. And West Texas Intermediate crude down 0.3%, 74.91 a barrel on WTI. So bottom line right now, mixed market. The S&P, NASDAQ lower, the Dow trading higher. As for the overall backdrop, Rayanne Mitrione is a partner with Callan Family Office. She was interviewed this morning on Bloomberg Surveillance.
We continue to believe that the U.S. economy is strong, and there are some tailwinds going forward that while we're a little bit, we expect more volatility, we're still optimistic on U.S. markets, but we have shifted some to international as well.
Rayanne Mitrione, a partner with Callan Family Office, interviewed this morning on Surveillance. Meta Platforms launching new smart glass models with Oakley aimed at athletes with improved video recording and features like double the battery life and water resistance. Meta Platform shares, they're down now by 1.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. Michael Regan sitting in for Alex Steele here today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. When we talk about commercial real estate, I often make the mistake of just thinking about commercial real estate, offices and stuff like that. And when it's a lot more than just office. It's industrial, it's retail, and multifamily, all that kind of stuff. And each of those subsectors, have different fundamentals driving it. So, but we'd like to talk to some people who do this stuff for a living, who are experts. Liz Hart joins us, President, Leasing North America at Newmark. She's in Cali at the moment. Liz, in the broader spectrum of commercial real estate, where do you guys see maybe the best value these days?
Well, I think what's really interesting right now, the demand is really up, and that's the thing to talk about first, and then we can talk about where the value is created. So demand is up 30% year over year on a national basis. That's tenants touring the market and looking to expand. Of those tenants that are touring, 2/3 of them are looking for the same or more space. And it's really shifted where in the last quarter, it went up by 20% of more tenants that are looking to expand. And I think when you see that kind of demand, going back to your question about value, you want to look at those markets that have been a little bit more distressed, but are now starting to see tenants that are touring again, looking for space and willing to commit to a longer term home.
Yeah, Liz, I wonder what explains that uptick in demand. Is it, my guess is it's that era of the work from home job is over. Is that part of it?
That's certainly a part of it, but I think the other part to talk about is the resurgence of the tech sector. So during the last 5 years, tech went from being a pretty major player in demand to being a little bit weaker. But now tech tenants are back to being 20% of the overall demand, just behind financial services as the top at 22%. So you're back to seeing tech back in the market, and you're seeing, particularly out of the San Francisco and New York markets, tech that's taking a lot more space year over year. You're seeing that growth from AI companies. So, everyone talks about AI having less space, but it's interesting that the AI companies seem to be very committed to the office and being in person.
Talk to us about San Francisco. That was a market that arguably a poster child for, what can really go wrong in the post-COVID world on so many different levels. What's your view of that market right now?
I'm feeling very good about the San Francisco market right now. I mean, it's always been a boom bust market. That's something that real estate investors have known for years. But what's really positive again is we're seeing a couple things. First of all, the demand at pre-pandemic levels. Keep in mind, right before the pandemic, there were 1 million square foot requirements that were there. Do we have those again? No, we're not at 1 million square feet in big tenants. We have some really good 100,000 square footers that are out there, and we have a lot of growth from companies that are under 20,000 square feet. And in the tech industry, you know, that's just a couple more years until they grow again. So we're seeing a lot of resiliency. We're also seeing great commitment from companies that have been there for a long time. JP Morgan just renewed their lease. Morgan Lewis just had a big move into the Transamerica pyramid. So those are more traditional industries that are also committing to that market, showing the resiliency across more than just the tech sector.
Liz, how about that retail sector? I mean, it's obviously been under pressure for years now with the shift to e-commerce. Has that sort of bottomed out to some degree? Is retail firming up at all?
Well, I think what's interesting, and you might laugh at this, is, you know, malls are back. Class A malls, 95% occupied. That smaller format, high street, performing exceptionally well. So we're excited about what we're seeing on that front as well. I mean, Americans love their brand. The whole world loves their brands, right? And we like to go and experience it in person. And the other trend we're seeing is a shift to more experiential retail. So when you have that retail format, you are there to shop. You're also there sometimes to do your returns, but you're really there to interact with that brand and amplify your experience with it.
Higher interest rates are one of the reasons that we're not seeing a lot of activity in residential real estate. How are higher rates impacting commercial real estate?
I mean, look, rates are one of the things that impact the overall commercial real estate market. I think the thing that we're looking at a little bit more closely right now is the labor trends and the business formation trends, especially on the leasing side. But, you know, I think people are adjusting to the reality that we're living in with higher rates than we were used to traditionally. And at this point, you have to move your business forward. And to do that, you need to have your commercial real estate. You need to have a place for your people to go.
You know, Liz, the tariff policies and the sort of austerity policies under the Trump administration have had an effect, a trickle-down effect on pretty much every aspect of the economy, or at least people are bracing for that. I'm wondering if there's any knock-on effects for CRE from everything going on.
Yeah, absolutely. I mean, I think, look, the tariffs have been a catalyst for some and a constraint for others, right? It's going to be a little bit of a mixed bag. But I think, you know, probably the place you're feeling it the most is the industrial sector. And you will see some contraction in those West Coast port cities, you know, just based on the tariffs and what's expected. But what's interesting is you're seeing a couple shifts. As an example, Phoenix, Salt Lake City, places that have great intermodal infrastructure, they're doing exceptionally well right now. Another thing we're seeing that I'm kind of fascinated by is a lot of corporates committing to buy their industrial real estate. So I think that, you know, we're seeing more than we've ever seen, and that's just a commitment to having, you know, more stable supply chains within the U.S.
Here in New York City, Liz, what's the call in this market right now? Mike and I are working in an A-plus quality building here at Bloomberg, fully leased. How about the rest of the market?
Well, you have one of the best buildings in the entire country.
Right.
But the good thing about New York is New York demand is also back at pre-pandemic levels. It's 27 million square feet. It was 20 million right before the pandemic. So I think it's heading the right direction. Trophy has definitely been one of the more dominant stories in New York. And we think that it will continue to be a dominant story going forward. Post-2019 construction is definitely what a lot of the trophy tenants gravitate to. And we may even see a couple new buildings pop up, you know, given that demand, right? Because that part of the market is exceptionally tight. Tech is also coming back in New York City. It's much bigger than it has been before. You know, there's a bigger concentration of tech talent in New York than anywhere outside of the Bay Area. So I'd expect to see some booming there too.
Liz, thank you so much. Appreciate it. As always, Liz Hart, president for leasing for Newmark. She's out there in California. Talk about the next trophy building set to open. Is going to be that JP Morgan building on Park Avenue. Man, it is awesome. I mean, we've all in the city here watched it be built over the last, I don't know, 5 years or something, or 4 years or something like that.
Yeah.
But I think it's supposed to open in the fall. And I've already told Tom we need to do it like a Bloomberg surveillance remote broadcast from this new JP Morgan building because it looks awesome. And I'm guessing Jamie Dimon's going to want all of his people back all the time for that building after what he's paid to build that building. So if you're ever in Manhattan, Park Avenue, I think it's like 48th Street, something like that.
Yeah, right around Union Square.
Check it out.
Union
It's
Station.
a monumental construction project right in the middle of the city. and that'll be a cool new addition to the New York City skyline. We'll have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, we have Michael Regan sitting in for Alex Steele. I'm Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. All right, we heard from the Fed this week. I would say it kind of came in line with expectations. That is, the Fed's not looking to do a whole lot right now. It's going to wait and see, maybe continue to take a look at the data. And that seems to be the play there. Ira Jersey, Chief U.S. Interest Rate Strategist at Bloomberg Intelligence. He joins us from the CAM down in Princeton, New Jersey. Ira, any takeaways from you from Fed Chairman Jay Powell and maybe his commentary or the reading of the note?
Yeah, I think a little bit. You know, the Fed is still neutral right now, but they are, I think, prepared to cut if they need to. And certainly we learned a little bit more about the reaction function that we might get. But, you know, there's still this overhang of what will tariffs do to inflation and inflation expectations. That was brought up again on Wednesday by Fed Chair Powell. So, you know, until we wind up with probably 2, maybe 3 more kind of inflation prints to see how inflation is kind of adjusting itself because of these tariffs, we probably won't hear much from the Fed. Now, importantly, and this is something that he did talk a lot about, was about their policy framework. So it's possible in August or September we'll wind up hearing from about changes to their communications policy. Do they make changes to the dot plot? Do they make changes to the summary of economic projections? All of those things might come out. And he gave us a lot of information about that, a lot more than we had anyway previously about how those discussions are shaping up.
You know, Ira, then this morning we had Fed Governor Chris Waller. He was on CNBC, sounding very dovish, which I guess is not such a surprise for him. He is considered, you know, one of the sort of uber dubs at the Fed. But he mentioned possibly cutting as soon as July. I wonder what you make of that. Is that really a far out there outlier of an opinion? Is he auditioning for President Trump's pick for the next Fed? What do you make of it?
So it's possible that he's auditioning for to be the Fed chair. You know, and he'd be an interesting choice because he is kind of a, yes, he's on the dovish side, but he's also a mainstream kind of Fed thinker in general. Now, the fact that he's dovish is because of his view of the economy and the outlook. And you know, the thing that Governor Waller has brought up is, look, we need to do things in advance because of, you know, the long lags that monetary policy takes to affect things. It winds up being, you know, 6 months to 18 months before an interest rate cut, one interest rate cut, much less several, actually filter through the overall economy. So I think his view is, hey, the economy is going to be much weaker this fall than I think most forecasters and his peers think. So therefore, we should start cutting in July. Now, he's in the minority with that very clearly. But there are these, you know, the median suggests that we're going to have 50 basis points of cuts by year end. But there's also this whole other camp that thinks they shouldn't be cutting at all, right? And we can't discount them because that's a large minority of the committee. So Chris Waller, yes, he's on the dovish side, but remember, there's also these more, you know, neutral to hawkish members that are suggesting, hey, we should really wait and see because the economy is not that bad and our outlook isn't terrible yet. So I do think that he's certainly in a minority. July is off the table. There's no way that they're going to cut in July.
You know, one of the issues obviously facing the Fed is inflation, and Fed Chairman Jay Powell said that he believes higher prices are coming as a result of tariffs, but we just haven't seen it in the data yet, Ira. I mean, how do you think the Fed's thinking about tariffs, thinking about possible inflation? Because, again, we just really haven't seen it yet.
Well, goods prices in some categories were a little bit higher in if you look at the May CPI report. But keep in mind, there's a couple of things. Part of this is timing. Like, we always expect things to happen in a 30-minute sitcom type of situation on TV, or now maybe a 5-minute YouTube video, right? But that's not the way that the real world works. We're still working through inventories that companies had prior to tariffs being implemented. So, and then it takes a month or two for the new goods to come into the country and for those tariffs to actually affect the prices of those imported goods. So we're only going to start really seeing that in the June data. So that's why the next two, I think, inflation reports are going to be key to how much of the tariffs are being passed through to the consumer via via higher prices, how much is being absorbed by both wholesalers and retailers in terms of or even manufacturers, and in them lowering prices versus the higher tariff. So all of these things are still question marks that we don't have in any of the macro data. On the other side of that, Paul, you have to remember there were other things like services and housing that actually saw slower price gains, and that's one of the reasons why you didn't see an aggregate CPI spike up at all, because of the slightly higher goods prices.
All right, Ira, it's the summertime, which means I don't have to worry about soccer and all that stuff. But now you got the Club World Cup. What is this?
The Club World Cup is a kind of a thing that FIFA made to try to make money, and bringing in basically regional champions from all around the world. It's really not been a particularly good competition because you have, European teams are absolutely slaughtering teams from other places around the world.
Hey, Miami did beat Porto. Let's not forget.
Yeah, that's true. And actually, PSG had what was upset as well. So there have been some good games, but I don't know. I'm watching the Gold Cup. The U.S. men's national team beat Saudi Arabia last night 1-0. And, because that's a warm-up to the actual World Cup, the real thing that's going to happen next summer here.
I just can't. There's so many tournaments and their clubs, the countries. I can't keep track. There's too much stuff. That's why we have Ira Jersey. He does the interest rate thing on the side, but he's really our go-to person on all things global soccer. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, coming to us from the Bloomberg offices. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, and coast to coast 24 hours a day. Bloomberg Radio on Sirius XM 21, presented to you by Oracle. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, coming up in this hour, we're going to check in with Ross Matheson, Bloomberg News Director for Europe, the Middle East, and Africa, get the latest news on the Israeli-Iran situation there. Cliff Kupchan, chairman at Eurasia Group, the latest on the Mideast as well. So we're going to start out strong geopolitics there. Mike McGlone's going to join us. He's a senior commodity strategist. I'm going to talk to him about oil here, what we're doing with oil, what we're doing with gold, and I'm even going to throw in a crypto question of Bitcoin if nobody's paying attention. Kathy Entwistle, Managing Director of Morgan Stanley Private Wealth Management, get her thoughts on the market. So a lot coming up in this hour. Let's kick it off in style with one Charlie Pellet.
All right, thank you very much. Back to work Friday. We have got the S&P lower, the Dow higher, NASDAQ in the red. This update brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interests. Learn more at ibkr.com/RIA. S&P 500 index now lower by 18 points at 59.62, a drop there of 0.3% as investors return from the Juneteenth holiday break to evaluate recent comments from a top Fed official, as well as the latest developments in the conflict between Israel and Iran. Keep it locked in to Bloomberg Radio for the latest coming out of the Middle East. The S&P down 19, down 0.3. The Dow up 20, up under 0.1%. NASDAQ up 0.8%. 10-year at 4.40% with a 2-year currently yielding 3.92%. Spot gold is trading lower, flat on the day right now, 33.71 the ounce. We'll have more on both gold and oil with our Mike McGlone coming up this hour. WTI, West Texas Intermediate up 0.2%, 75.26 for barrel of WTI. Bitcoin right now down 0.3%, 104,060 on Bitcoin. The U.S. may revoke waivers for allies with chip plants in China, that according to the Wall Street Journal. Federal Reserve Governor Christopher Waller tells CNBC the central bank can lower interest rates as soon as next month. Joanne Bianco is a partner at BondBlocks Investment Management, and this morning on Surveillance, she discussed the outlook for the Federal Reserve.
They've said they're on hold. They say they've been on hold. There's 4 meetings in a row that they've held rates steady. And, the resilient economy has given them the luxury of time to continue to see how things develop with regard to inflation, in case it eventually surges from tariffs.
West Texas Intermediate crude oil now higher by 0.2%, 75.26 a barrel. Oil stocks are advancing. ExxonMobil up by 1%. ADR is a BP up by 0.2%. Chevron shares are up by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Michael Regan sitting in for Alex Steele on Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on that internet thing as well. Right now, let's take a look at some of the stocks on the move today. I'm Paul Sweeney with Michael Regan, and we're joined by Bloomberg's Lisa Mateo.
All right, so I want to start with shares of gunmaker Smith & Wesson. That's ticker SWBI. Their shares have been down as much as 19%. It's saying 13% after the close yesterday. It's really looking at another challenging year, right? Customers have been cutting back their spending on firearms. It posted lower quarterly profit and sales. Some of the specifics, so it posted profit of $8.6 million compared with $27.3 million a year earlier. So that's a big difference. And it also pointed to factors like inflation, interest rates. It said tariffs on steel could drive up their costs. And its CFO really put it into perspective so that the company expects demand for firearms in fiscal 2026 to be similar to what they saw in fiscal 2025. Management didn't provide any guidance because of uncertainty with tariffs. tariffs. But what it's doing differently to deal with the slower demand, and that is it's limiting its inventory. So its CEO said several smaller firearm manufacturers, they're also struggling to stay afloat because of the slowing demand, and they're also starting to exit the market too.
I thought this was a bigger company, market cap of only $387 million. Okay, I got it. Maryville, Tennessee is where they're based. 1,500 employees. What else you got?
All right, so we got Kroger. That's the nation's largest supermarket operator. Yes, ticker KR. Its shares rose more than 8%. That's actually the highest intraday since March of 2024. Reported a beat on sales, steady grocery spending, comparable sales. When you take fuel kind of out of the picture, it rose 3.2%. That was better than what Wall Street expected. They also raised full-year sales guidance. They said it saw a $100 million impairment charge. That was due to its plans to close about 60 stores over the next 18 months. So they do plan to close some stores. When it comes to tariffs, they said, you know what, it's not going to bother us too much because a big part of our products are sourced domestically, but it still faces a few challenges. Paul, I know this is one that you've talked about. Shoppers kind of buying the cheaper products, you know, like going in the store and saying, going for the cheaper products, or they're getting more items on sale too. And it really needs to spark growth because it had that failed deal with Albertsons, so that it's also dealing with that too on top of it.
But they're not around here, are they? They're not in the like Jersey area.
Kroger, not too much, but if you look at shares like for other ones that are in the area, like a Walmart and a Costco, their shares are higher too because of this news.
Interesting. All right.
And then finally is building products distributor GMS. Its ticker, yes, GMS. Its shares are up as much as 25 cents. So really sparking. The reason why is this Wall Street Journal report that Home Depot made an offer for the company. No word on the price. And that would possibly set off this bidding war with QXO, because they offered to buy GMS for about $5 billion earlier this week, and GMS said its board is reviewing that offer from QXO. But the big appeal with GMS, like what's so appealing about it, is that Home Depot and QXO, they're looking to expand, right, their share for market construction, supplies, and tools, and they're hoping that that bigger entity like GMS is going to help pull in business from more contractors, and that's what they're needing. So QXO, they're up about 5%. Home Depot has been up as much as 0.5%.
All right, Lisa Mateo, thank you so much. We appreciate that. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports of the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We got a couple of guests here that are going to help us get current on what's happening over there in Israel, Iran, escalating tensions right there. We're going to start with Ross Matheson, Bloomberg News Director for Europe, the Middle East, and Africa. Ross, it appears that the latest news that the market's digesting is President Trump will give up to 2 weeks before he makes a decision as to what role, if any, the U.S. will play in further military actions. Is that kind of your read as well?
Well, it seems like he's trying to get a bit of space here. Of course, Donald Trump is famous for saying everything could happen in 2 to 3 weeks' time, and that's a mantra he's repeated, and then sometimes again he's changed his mind. But it does appear at this point that what he's trying to do is just allow a bit of room here before the US needed to commit potentially to direct strikes on Iran and allow Iran to perhaps come forward with some kind of proposal that would allow them to have this conflict come to a halt. And so it would have to be a proposal that Iran might cede some of its nuclear program, and then would have to be acceptable to Israel. I mean, the comments that we've had today from the Iranians suggest they are really holding the line. They're saying the usual things. They're not going to be willing to give up enrichment entirely. They're certainly not going to be willing to do it, and if the bombs are still flying, until Israel halts its offensive against Iran. So it's a very slim chance here that we have that we're going to get some kind of proposal from Iran, perhaps facilitated by the Europeans, that the Iranian foreign minister is meeting today in Europe, passing some messages. Can we get something at least to put on the table for the Israel to consider, and also for the US President Donald Trump to consider, when again he's all these factors in his heads, the pros and cons of getting the US directly militarily involved in Iran?
You know, Roz, when I listen to all the quotes and read all the quotes coming out of Washington, I'm struck by how there's a real lack of unanimity on what politicians think Trump should do in both parties, you know, and I wonder if that is maybe causing his hesitation here. But I'm curious if there's anything closer to a consensus coming out of Europe from the leaders you've heard from.
Well, European leaders are very clear that they want this to stop and they want Iran to get back to the table. But the reality is they're kind of bit players in all of this. I mean, this began because the Israeli Prime Minister Benjamin Netanyahu made a unilateral decision to proceed with attacking Iran. In the face was quite a sense of unease from the US about doing that. So if he's not listening to Donald Trump, he's not really going to be paying that much attention to the European leaders. I mean, they're all expressing a lot of concern about this, but their role may simply be to provide a platform to talk to Iran, to carry some messages, to coax Iran into giving up, a proposal, because there are those networks and understandings between European leaders and Iran. So perhaps their role is that. But in the end, as you say, no one really knows what Donald Trump plans to do. Perhaps even Donald Trump, he does seem quite conflicted. He's got a lot of things in his head to weigh up here. He's got the domestic imperative in the US, he's got the political environment there. You've got some people saying you need to go and do this now, or Iran may be able to build a nuclear weapon. You've got others saying don't do this, you're going to draw the US into a war, yet another war in the Middle East. And does this set off a broader conflict in the region? So a lot of calculations there. But the Europeans are really quite sidelined in all of this. They seem to be mostly trying to keep those channels going with Iran.
So it kind of goes to that issue. I was just going to say, do we have any sense that there's any strong lines of communication between the U.S. and Europe? But I guess you're suggesting is probably not.
At this stage, not really. Doesn't seem to be. I mean, you've got a bunch of countries who are trying to mediate, to offer their services, to try and build those channels with Iran. I mean, it's also Europe, it's Pakistan. The Russian president, Vladimir Putin, keeps offering his services to mediate. No one seems to be really keen to take him up on that one. And of course, the Gulf states in the region, I mean, they're right on the cusp of these countries and they're watching this with a sense of alarm. They may not be major friends of Iran or great fans of the regime. And equally, they don't want a nuclear weapon on their doorstep, but they also don't want this conflict to really blow up. So they're probably providing some back channeling as well. So all of that trying to coax again Tehran at this moment. What is it that you could put on the table, at least, that we could take to Israel and possibly to the US?
All right, Ross, thank you so much for joining us. Always appreciate your reporting. Ross Matheson, she's the news director for Europe, the Middle East, and Africa for Bloomberg News, and she is based in London. Let's continue this conversation on the Middle East. We'll broaden it out a little bit, maybe some scenario analysis here. Cliff Kupchan, he's chairman of the Eurasia Group. Cliff, thanks so much for joining us here. Again, speaking with Ross Matheson of Bloomberg News, the latest news is that President Trump appears to be taking a little bit of a pause here. How do you think this potentially could play out? There's a number of scenarios I know you've kind of gamed out.
Most likely is there's talk for a week, 10 days. The Europeans lead the way. Iran refuses to give up domestic enrichment, and the U.S. takes out, or tries to take out, I think probably can take out, the Fordo enrichment plant, which is under a mountain. That would be escalatory, dramatically escalatory, big spike in oil. There are other scenarios where I don't think Iran would try to close the Strait of Hormuz. We can come back to that. Other scenarios where this does escalate, and even more in response to the U.S. strike on Fordo, Iran tries to take out, stop shipping through the Strait of Hormuz. And then there's a small chance, maybe 1 in 5, 20%, I think is how I'd game that out. These talks actually work. But it's a really, it's kind of a Hail Mary, I think, by all sides, because no sides want to escalate. But I think it's a really small chance.
Cliff, I've seen a lot of sort of guesswork and estimates regarding how many missiles that Iran really has left in their stockpile. They've used a lot have been destroyed by the Israelis. Is it a possible scenario that in this 2 weeks, that stockpile just runs so low that they are unable to keep launching at Israel? And is that enough to sort of bring the temperature down on all of this?
I think the rate of missile salvos from Iran is already dropping.
Yeah.
They are, like any country would, I think, going to keep some in strategic reserve. And, no, I don't know. I don't think anybody knows, at least in an unclassified world, exactly how many they have left. But I think they're all already running low. I mean, Iran just doesn't have good options right now. We'll see if they hold to the hard line, or which I think they will, or if it actually, they run out of resolve and they concede.
Cliff, is regime change a policy or a strategy that Israel and/or the U.S. should proceed or follow in Iran? Is that even on the table, do you think?
I don't think it's, verbally on the table. I think that Trump doesn't want it. It's, just stepping in too much. I think Netanyahu would like it if the Iranian people rose up and it did what, in his view, is finishing the job. From a historical perspective, almost every time the U.S. is engaged in regime change, something unexpected happens, and it doesn't work out like we thought it would. Iraq is the best example. When we did take down Saddam Hussein, and we got a failed state. So I don't think it's very good policy. I think it's really risky policy. If you're Israel, you have a chance to take down the devil right now. History's on your side for the first time in decades. And I think for the Israelis, this is a period of maximum Bibi, of the wind's at our back, and this is a generational chance to take down our arch enemy. So tricky policy. I think Israel would like it, may go for it. The U.S. No, it's not what's on the table for Trump.
Cliff, you mentioned the Strait of Hormuz, like such an important part of global shipping and a potential bottleneck there. And you said you don't think Iran will try to shut that down. Why? What makes you think that?
It's a lose-lose for them. They need to get their oil out, tremendously dependent on oil revenues. 100% chance the U.S. comes into the war in a major way. They probably get the Gulf armies, French, UK involved. And, the Iranian leadership is smart. I haven't been there in a while, but I used to go, a number of times. They're smart. They get it. And I think they know they couldn't keep the strait open for a long time. They couldn't close it for a long time. The thing I worry about is that when regimes get desperate, they do irrational things. And if the U.S. takes down Fordo and the nuclear assets enrichment are really blown up across the board, the regime could get desperate. And we could see that would be an irrational act. They could do that. And that's what I fear most. Right. That's the scenario that I fear most about the Strait of Hormuz.
Okay. Cliff, thank you so much for that. We appreciate your perspective. Cliff Kupchan, he is chairman, Eurasia Group, joining us here to give us the kind of gaming out some of the options, base case, kind of a bad case, and then maybe a stand-down case. Everybody just kind of goes back. So lots of options out there. The next seems to be the role that President Trump decides that the U.S. will play, if any, in any future action. So we will have continued reporting on that. Coming up, Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist. He's going to talk to us about gold, about oil, about Bitcoin even, maybe pork bellies. We'll see about that.
Pork bellies.
Pork bellies. You never know. S&P unchanged on the day. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow higher, the S&P, NASDAQ. They are both declining. And this update is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Stocks lower after a report on the U.S. potentially revoking waivers for allies with semiconductor plants in China. That's weighing on chip makers and the broader tech group. We begin with NASDAQ, trading lower now by 0.5%. The S&P down 5, drop there of 0.1%. The Dow holding on to a gain of 95 points, up now by 0.2%. The NASDAQ 100 index lower by 0.4%, and our Mag 7 index down 0.9%. 10-year at 4.39%, with the 2-year currently yielding 3.91%. Gold down $3.50 the ounce, 33.67, down 0.1%. West Texas Intermediate crude down 0.3%, 74.95 a barrel, and Bitcoin little changed on the day, 104,262. We'll have a whole lot more on commodities, gold, silver, and yes, pork bellies coming up with our Mike McGlone. Sources tell Bloomberg Tesla is set to open its first showrooms in India in July, kicking off formal operations in the world's third biggest auto market as the Elon Musk-led firm hunts for growth amid falling sales in Europe and China. Tesla right now down by 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Let's get to that Muni report. Elizabeth Remberg joins us. She's a Munis reporter for Bloomberg News, joining us via that Zoom thing. One of the areas, Elizabeth, we've been talking a lot about, it seems like over the last 6 months, has been colleges and universities as issuers into the municipal bond market, but there's some headwinds out there as it relates to their tax-exempt status. That may be under threat from President Trump. What's the latest there?
Yeah, that's right. So Trump's threats to colleges' tax exemptions really started after Harvard University refused to submit to his administration's demands for the school to reform things like university governance, end DEI programs, and make changes to its admissions and hiring, among some other requirements. Harvard refused to comply, setting off an escalating fight between the school and various parts of the Trump administration, including Trump saying that the school may not deserve its tax benefits. Now, Bloomberg is reporting that there are talks within the Treasury Department that would change internal policies that could pave the way for any private school to lose its tax exemption if it considers race in admissions, scholarships, other programming, and even facilities.
Now, Elizabeth, is this something that Trump and his Treasury can just do with the stroke of a pen, or is it a more complex thing that they need to do? I mean, does Congress need to get involved? What's sort of the next steps for Trump to try to pull this off?
It's definitely a more complicated process than just a stroke of a pen. And there's actually a federal law that bans the president from asserting any influence on things like this. So that is an obstacle for Trump in getting any tax exemption revoked. But as far as the proposal that we reported on, it is just a proposal at this point. It wouldn't need congressional approval to go into effect, but the experts that I talked to told me that it would need to make its way through a public comment period before becoming official. And then the IRS would have to audit specific schools for suspected violations of the tax code. And then that established process includes opportunities for the schools to remedy any potential violations or appeal the agency's findings. And then if the IRS did indeed decide that a school didn't qualify for their tax exemption anymore, there would be opportunities for the school to likely fight that decision in court.
What does that mean for some of these schools that are in fact or have issued debt in the municipal bond market, would that threaten would the change in status threaten their ability to access that market?
Yes, that's right. It would affect their ability to access munis, but it would also have many other devastating consequences. For example, the status allows them to skirt paying corporate income taxes. It helps them get breaks on property taxes. And it also really incentivizes donors by allowing gifts made to the schools to be deductible. A Bloomberg analysis found that Harvard saved at least $465 million via their tax-exempt status in 2023. So it would be a big hit to their balance sheets.
You know, Elizabeth, I'm a father of college students myself, so I have a very selfish question here. This all sounds like tuition could go up a lot. Is that a concern if Trump is successful with this?
Definitely. I think that is a concern because schools will be looking for any types of levers that they can pull to offset those costs. And if your kids or if any listeners' kids go to private schools, tuition increases is really one of the only levers that they can pull when it comes to finding other ways to plug balance sheet holes, because unlike public schools that get support from state, tuition income is generally one of the biggest sources of support on that income side for these schools.
I don't know, Michael, having worked myself at the board level of a major university, I just think the cost structure is completely screwed. You can't keep raising tuition at above inflationary rates forever. Right. You know, there's going to come a time when I think they're going to have to look at their cost structures in a huge way.
With what the rates on student loans are now.
Yeah, exactly right. Real quick, Elizabeth, what's the cool deal you and the market is looking for in the next week or two? Or fun deal?
I think that a lot of the market participants that I'm talking to are really, they're not pointing towards specific deals that they're looking at, but they're pointing toward the longer end of the curve, where they're saying that if muni investors are able and willing to wait out, you know, those 30-year maturities, there's a lot of value to be found there. I talked with some folks who are saying that, oh, and if you run it on, you know, the terminal, you'll see that the relative value to treasuries is approaching that 95% yield, and that's a really attractive entry point for some buyers.
All right, Elizabeth, thank you so much for joining us. Really appreciate it. Elizabeth Rembert, she's a municipal bond reporter, Bloomberg News, and a proud graduate of the University of Nebraska. How cool is that? That's what I'm talking, middle America, growing some corn and soybeans out there. Mike McGlone knows a thing or two about that, being a Midwesterner. Mike McGlone, senior commodity strategist for Bloomberg Intelligence. He's not in the Midwest anymore, folks, and he's not in New York metro market. He's in the new hub of
you can't pin this guy. You can't pin this guy down.
He's down in Miami Beach. He's basically taken over the Miami bureau for Bloomberg Intelligence. Hey, Mike, we got oil kind of whipping around here over the last several days as this tensions in the Middle East kind of flare up here. What are the traders telling you? What are investors telling you here? Just kind of a geopolitical bounce in what is otherwise a bear market?
You nailed it. I think that's exactly what it is. It's a question of how much higher and how much longer it can stay here. Will there be a definitive cut in production, which is very unlikely? The last time we had a bit of a shock in production was when Iran was notably attacked Saudi Arabia in 2019, and their ability to do that has been has been very much limited now by the Israel gaining air superiority over Iran. So to me, this is a bit of a shorter term thing. It's going to accelerate those pre-existing trends that we have. Our demand estimate revisions remain downward on a global basis, most notably from China. And supply estimate revisions remain upward. This higher spike is just, I think, giving producers a chance to sell forward, bring on that supply, and responsive traders who've been waiting for a bounce, I think, are going to be jumping on board.
You know, Mike, prices prior to this pop higher because of the geopolitical tensions, prices were getting down to that level where you start wondering about the U.S. shale producers, whether they start turning off the spigots. You know, we saw the rig count was very low. Is this pop enough for them to get going again, or are they going to be on the sidelines and just wait to see how long it lasts?
I think it's more the former. First of all, that's the key point. What's the number one force to reduce that excess of supply that's been coming out of the U.S. and Canada? This trend has been in place for almost 20 years. The number one force to reduce those forces is lower prices. Now, you noted that starting to kick in. The key thing is we started seeing rig counts drop a little bit. Let's remember the significance of rig counts and drilling technology. The same rig counts right now, that level's about the same as 2010 in the big picture, yet we've doubled production since then. We can now drill numerous laterals and go out for many miles. So it's that technology that's significant, bringing on more supply. The demand is decreasing, but what matters is now we've had that bounce, and you can see that in the forward curve. The prices are still lower because I think producers are thinking, okay, my break even in the U.S. between 50 and 55, and the front contract just bumped to 75. What's that going to do for supply? If I can sell a little bit forward, you bring on the supply.
All right, let's switch to agriculture, because I grew up here in New Jersey, and when we're talking about corn, it's knee-high by the 4th of July. That's when you know you got a good crop and everything's going to be good. But I know, Mike, the real stuff is grown out where you're from, out there in the Midwest. We're talking Nebraska, Illinois, Iowa, all those great states out there. How's the planting season? How's the growing season? What's the expectation for some of those big grains that are so important for our farmers?
It's going very well so far, Paul. We've added about 5 to 6% to corn planted acres this year because the prices were low and there's a lot of incentive to produce more corn. So if we have a normal crop year, prices will continue to decline towards that cost of production. In the U.S., we estimate that below $4 a bushel, and corn right now, corn's about $4.50 a bushel. So to me, that's the risk, is we have a normal supply, a normal year. You basically need a drought for these prices to go higher. And the number one force for all the grain processors is that massive supply coming out of Brazil. And why did it come out of Brazil? Number one, the technology is kicking in, China's helping, but because prices pumped on the back of Russia's invasion of Ukraine. Pump up the prices, bring on more supply, elasticity kicks in, and we're still heading towards that lower price cure. So unless we get a bad drought this year, prices can probably continue to bounce. But we just haven't had a scare yet. Typically you get a bit about a scare coming into July, August.
Mike, it's always great to talk to you because we know that if something has a price chart attached to it, you got a take on it. So I'm curious what you think about Bitcoin. You know, really been range bound lately, despite all these corporate treasury buying. What do you think's going on there? Are we just stuck in the range for a while?
Well, Bitcoin right now reminds me of the mantra, you're supposed to be selling when they're yelling. When Michael Saylor, who famously got bullish, we discovered Bitcoin, it was around 10,000 in 2020. That was the time to buy. It was really cheap and everybody hated it. Now that everybody loves it around 100,000, be very careful. The significance I like to point about Bitcoin is since it's reached that threshold at 100,000, the first end of the day above that level was on December 6th. Since that day, it's about unchanged, maybe 105,000 right now, but gold's up 30%. So to me, that showed us the limits of this highly speculative digital asset, the limits of U.S. stock market risk asset appreciation, and gold is taking the mantra, and I think it's still a bullish factor for gold, particularly if Bitcoin declines.
Mike McGlone does it all. We appreciate it. Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence down there in our Miami Beach office. We'll get to pork bellies with Mike next time, looking at that. But yeah, Bitcoin pretty much unchanged on the day, but 104,000 tokens. So, you know, that holding that $100,000 threshold that a lot of people feel like is at least a psychological floor. So we'll keep on top of that. Coming up, Katie Entwistle, Managing Director, Morgan Stanley Private Wealth Management. We're going to get her thoughts on these markets. That's coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got an update now for the S&P 500 index back in the green. Little change, perhaps the key takeaway. Also holding below 6,000 right now. The S&P is at 59.86, up 5, gain there of 0.1%. Dow Industrials up 165 on the Dow, a gain of 0.4%. While Nasdaq is down 39, a decline of 0.2%. The Bloomberg Mag 7 index lower now by just about 0.6%. The 10-year 4.38%, with the 2-year 3.90%. Gold now down 0.1%, 33.67 the ounce, and West Texas Intermediate crude lower by 0.3%, 74.93 a barrel on WTI. A sell-off in chip makers rattling stocks after a news report from the Wall Street Journal that the U.S. may revoke waivers for allies with semiconductor plants in China, reigniting concerns about the trade war. Well, as for the outlook for this summer, Sandy Bragger is principal at Aspirant, and right here on Bloomberg Intelligence, she told us she is not expecting a quiet summer.
Summertime tends to be pretty mild in the markets. A lot of people going away on vacation, but there's a lot of reasons for some spice to be added this year with the tax bill on its way, things changing in the tariff world with the reprieve coming off, a appellate court decision later this summer. And then, of course, we have the truce between the U.S. and China trade being revisited at the end of August.
Sandy Bragger of Aspirant, and of course, great reasons to keep it locked into Bloomberg Radio for the latest earnings news. Kroger, the supermarket chain, surging after earnings, up now by 9.2%. Used car retailer CarMax up 6.1% after earnings, and Darden Restaurants, parent of Olive Garden, among many other chains, up by 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, Charlie Pellet, thank you so much. We appreciate that. We've got Michael Regan sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well, so check us out there. All right, it's pretty much close to mid-year. Time for a good mid-year review and maybe a look ahead. Nobody better to do that with than Kathy Entwistle, Managing Director, Morgan Stanley Private Wealth Management, joining us here today via Zoom. So, Kathy, when you sit down with your clients here we are approaching mid-year, how do you kind of put the year-to-date into perspective and then maybe how to proceed going forward?
That's a great question. It's been such a up and down year, right? We started with a big downdraft in the markets, and then we had a relief rally. So it's almost like being patient and waiting through those challenging times and maybe coming up with ways to improve on the portfolio when the markets are volatile is a good course of action. So our midterm reviews with clients, we're basically recapping what's gone on, why the markets went down, why the relief rally, and a forward-looking thought process of what our expectations are with the market. And we think if clients can look into 2026, we can see some very good reasons to be invested in the markets and to continue that course of action along with other asset classes that will help modify the portfolio with uncorrelated assets.
What is it in 2026 that you see as being so bullish?
The idea that AI is going to come into play more. We're going to see more productivity in the companies that are reporting their earnings, that their balance sheets will be even stronger as a result. Some of the companies this year have been taking a little bit of a hit, even though it's not really showing up in the numbers, but they've been absorbing some of the tariff costs. I think that's about 50% of the companies reporting are absorbing a great portion of the tariff costs. And next year, that I believe we'll see through that. At that point, a lot of these issues will be resolved and we'll have a better understanding of what to expect going forward. The fact that they can absorb those prices, though, has been positive.
Kathy, Fridays is Municipal Bond Day here on Bloomberg Intelligence Program. How do you think about munis in your clients' portfolios?
I'm a huge fan of munis. I think they are an integral part of a client's portfolio. They dampen volatility for the most part for clients. It provides that tax-free income. And even if clients don't need income right now, if they're still in that accumulation phase where they're working and bringing in money, having that tax-free income, if you've got, a 4% coupon right now or yield, and you're in the highest tax bracket, that could be close to an 8%, taxable equivalent return. And we like that. We think that's a great way to add some stability to a client's portfolio and also consider their tax request, like requests for tax minimization, like to lower that impact for taxes.
Kathy, we were talking earlier about this outperformance of the rest of the world versus the U.S. this year, especially in Europe. I'm looking at the DAX is up 17% this year. Have investors missed the boat on that sort of overseas rotation, or is there still a case to be made to broaden your exposure to Europe and even maybe some of the markets in the Americas here, ex-U.S.?
Yeah, absolutely. Great question. There's certainly an opportunity to continue to add to the international market. There's still much lower PEs, price to earnings ratio on the stocks, and just makes them more attractive and more valuable. So we are continuing to add to international. I personally had clients underweight international coming into this year, so I've been adding a little bit more there.
Alternative investments, whether it be private equity, private credit, hedge funds. What kind of allocation do you think is reasonable for some of your clients?
Yeah, I think that it's very reasonable to have a decent size allocation. I generally look at 20 to 30% for clients. It's a great, again, non-correlated asset. The private markets have become very interesting and diverse in terms of what they offer clients, whether it's credit or, private equity. And we try to be thoughtful about how we even allocate within that space. So there's, underlying areas that we like, such as hedge funds or infrastructure. I really like infrastructure right now for clients. And we used to think of infrastructure as like bridges and tunnels and roads, and while that might still be true, it is now also digital, the data centers and the telecommunications and the infrastructure of communication throughout the country.
Kathy, you mentioned that a lot of companies are absorbing the costs of the tariffs themselves. I mean, that sounds to me like pretty threatening for profit margins. How do you see that playing out? Is it, will that lead to price increases further down the line to protect those margins, or are we just looking at a lower margin world for the foreseeable future?
That's also a great question. At the end of the day, we're trying to figure out what actually is going to be happening. So there's still uncertainty around tariffs and what the end game is going to be. So for a temporary time period, companies are absorbing and trying to make that work through. But yes, when you are absorbing costs, your profits are going down, and that is going to hit the bottom line eventually. So I think it's more of a longer term view. Over the next 6 to 12 months, we should have a lot more clarity on tariffs, and then we can evaluate these companies even better in terms of their long-term cash flow and earnings.
Kathy, thanks so much for joining us. We always appreciate it. Kathy Entwistle, Managing Director, Morgan Stanley Private Wealth Management, joining us via Zoom from New Jersey. What are you looking at in the markets here, Michael? What's kind of getting your attention here? As again, we come to kind of the mid-year part.
What's amazing to me, Paul, is I don't know if you looked at the futures at all yesterday during the holiday, but we had a nasty dip in equity futures, down around 1%. It's just remarkable that there was no follow through to that today. We did see a little bit of red, but looking at a very sleepy summer, S&P at basically flat on the day. It's kind of surprising to me.
I think it's going to come down to earnings to a certain extent, because I guess what we heard from the Fed yesterday is maybe 1 or 2 points. That's kind of what the market's. So if the Fed's not going to be, more active on the down in terms of lowering rates, earnings have got to come through.
Yeah, and we're going to hear a lot more about those tariffs and be able to sort of sharpen the pencil on what exactly they meant.
Yeah, I mean, the tariffs are still out there, but again, it's that initial shock that how they were initially announced, maybe, fumbled, a lot of folks would argue, in terms of how they were initially announced, kind of walking some of that back. So looks like the market's getting a better handle on how to price in some of these tariffs. But again, still very uncertain, I guess is still the word that is right up front. S&P 500 up 5 points. The Dow up 150 points. That's 0.3%. And the NASDAQ off 45 points. So red and green here on the screen. The VIX 19.8 for Tom Keene. This is Bloomberg.
This is Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, Michael Regan sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, June is Pride Month, so over the next couple of weeks, we are going to highlight segments on topics related to equality. Today, we're speaking with Ashley Fox, CEO of Empify. She joins us from Atlanta via Zoom. Ashley, thanks so much for joining us here. First, tell us what you guys are doing at Empify.
Thank you for having me. So we are a fintech startup that is revolutionizing how adults and children are learning how to build wealth. So we create financial education programs, tools, resources, and events targeting the 99% that Wall Street often overlooks and giving them the tools and resources to effectively build wealth.
Yeah, actually, I'm reading a story about you. I understand you're from Philadelphia, so I just have to say, go Birds, first of all.
Yes.
Gotta get
Yes,
that
I
in.
Yes.
But I know you come from a background where you served sort of high net worth individuals. How do you sort of take the lessons from working with that group and apply it to the 99% who aren't as affluent?
Yes, I used to work with ultra high net worth individuals. So every day I saw where they invested, where they shop, live, travel. And for something I feel like we're using every day of our life, it is not taught in our school system. So I decided to create Amplify as a way to translate that Wall Street knowledge and give it to the everyday person. So while I didn't grow up with a ton of money, I bought my first stock because I saw wealthy people doing it. I started to invest for my family because I saw wealthy people doing it. So being able to translate that knowledge and show individuals that it is possible to invest in the stock market, starting with as little as $20 and share by share, brick by brick, you can start to create the life that you want to have for you and your family.
So Ashley, who's the target audience for Amplify? Talk to us about how you reach your audience.
So a lot of it comes from just social media. We have partnerships with different banks, financial institutions, and organizations. But we have programs that have been created for children. So we've been in middle schools, high schools. We've also been in prison systems. But we also target that working professional and entrepreneur, typically between the ages of, I would say, 18 to about 55 years old. Those individuals who want the financial education but don't know where to get it, who may not have had those tools and resources or have come from wealth, but they are aspiring to do more and have more, and now realizing that you can do more and create more wealth. You don't just have to have a job, but what does it look like if we actually put our money to work and start investing in companies that we know, use, and believe in? And so we give them those financial resources, showing them how to start with what they have and where they are to create the life that they desire.
Actually, at the same time, over the past few years, there's been so many what I like to call like shiny objects in the market. Meme stocks, crypto, options that have really lured a lot of sort of individual retail traders into really risky positions. And I'm wondering how that risk tolerance looks like to your clients, and is it a challenge to say, maybe you don't want to get into this options on this meme stock over here? Is there still a lot of interest in that type of stuff that you have to sort of talk them out of to some degree?
I don't necessarily have to talk them out of it. I think it's setting the tone. So when we work with our individuals, it's like, hey, we're not going to get you rich quick, but we can show you how to effectively build wealth over time, starting with what you have and also shying away from those opportunities. Because when I think about the clients I worked with on Wall Street, they didn't get rich because they bought that one sexy stock and they made millions and millions of dollars. They built their wealth over time by investing in themselves or someone else's idea. So it's showing the everyday person that, one, the market, you don't flip your money every single day. When you're buying a stock, you are owning a piece of a business, and it takes time for businesses to grow, but being able to be consistent with your money and learning what you need to do to effectively accomplish the goals that you set. So inside of our platform, our Wealth Builders community, we have different boot camps that'll help you plan for retirement, teach you how to trade with options, but we are very, very, very clear. We're not going to get you rich quick, but we can show you how to build wealth like the 1% and utilizing that exposure that Wall Street gave to me and bringing it to individuals that want to learn how to do more with their money.
How does technology impact just kind of educating people about financial services products? It seems like now every bank has an app where you can do pretty much everything.
I think it allows us to reach more people and scale. I think when Amplify first started, right after I left Wall Street in 2013, we were going into school systems and we didn't have the technology. Now that we have technology and all the resources that are out there, it allows us to reach more people in a more effective way. So at this point, you can learn financial education in the palm of your hand, where you don't necessarily have to go into a school system or walk into a bank. But I think it allows us to really scale, because back when I was on Wall Street, investing wasn't the sexy thing to do for retail investors. I think over time, it's now been something people have an interest in. And I think it's really showing them how to effectively do it in a calm way, but allowing technology to really let you scale and reach masses of people all over the world.
Ashley, thank you so much for joining us. Ashley Fox, she's the CEO of Amplify, joining us via Zoom from Atlanta, talking to us about bringing financial literacy to a wider audience. And, I know a couple of friends of mine have kind of moved into that space as they've stepped back from the Wall Street career. And technology's been, just amazing, the ability to obviously, bring their content to just an extremely wide audience.
Yeah, and bringing those trading costs down too. I mean, remember it used to cost you, what it used to cost
I used
to trade?
What stuff I charged back in the day, especially when I was trading over-the-counter stocks. You could build a career on it, as many people did here. Looking at that, the market's a little bit mixed here today. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM 121 is presented by ShipStation. So, Michael Regan, thanks for stepping in for Alex today.
Yeah, I'm no Alex Steele, though.
No Alex Steele, but no, that's a tough act to follow for anybody. Looking at the markets here, absolutely mixed here. The Dow is up 65 points. The S&P's down 10 points, and the NASDAQ is down 96 points. Still, the uncertainty, geopolitics, trade, tax policy, a lot of cross currents out there for the market to deal with. Coming up later today, Bloomberg Business Week countermaster Tim Stenovec. How about that to close out your summer Friday? It is officially summer, so have fun out there. This is Bloomberg. Good morning.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. We're hearing from Iran's foreign minister who says there's no room for talking as long as Israel continues to attack his country.
We were attacked in the midst of an ongoing diplomatic process. We were supposed to meet with Americans on 15 June to craft a very promising agreement for peaceful resolution of the issues fabricated over our peaceful nuclear program. It was a betrayal of diplomacy.
Foreign Minister Abbas Arghachi is in Geneva meeting with European diplomats. CBS's Elizabeth Palmer has more on what French President Macron is asking for.
One is a resumption of the IAEA, the International Atomic Inspectors inspections, and also moving Iran toward net zero enrichment. He also said that there has to be oversight, or there ought to be an agreement to provide oversight and presumed limitations on Iran's missile program.
As President Trump considers possible U.S. strikes on Iran's nuclear facilities, sources tell CBS News that law enforcement officials have stepped up surveillance of Iran-backed operatives in the U.S. The Supreme Court has revived lawsuits against Palestinians from Americans killed or wounded in terror attacks. Legal analyst Lori Levinson.
The Supreme Court deciding to allow victims of terrorist attacks to actually sue the Palestinian authorities, even though those individuals are generally outside the United States, but have activity within the United States. And the court said that the statute that allows that meets due process standards, and this will make it easier for victims of such attacks to bring these lawsuits.
Millions of people in the nation's midsection and west are in the grip of a heat wave hours before the start of summer. CBS's Jim Crisula.
Much of the nation will suffer through 100-degree heat well into next week. If you're looking for cooler weather, head to northwestern Montana, where a winter storm warning is posted for Glacier National Park. Up to a foot of snow will fall there over the weekend.
A day in court today in the UK for a Grammy-winning singer.
No answer from Chris Brown as he walked past reporters into the London courthouse. Inside, he answered, "Not guilty, ma'am," when the judge asked how he pleaded to the charge of grievous bodily harm. Brown and a co-defendant are accused of attacking a music producer with a tequila bottle in a London club 2 years ago. Vicky Barker, CBS News, London.
The insurance company Aflac reports a hack attack that may have compromised customer information. Wall Street, the Dow is up 52 points. The S&P is down 10. This is CBS News. music streaming service Deezer said today it will start flagging albums with AI-generated songs. The site figures that's about 18% of the music uploaded every day. Seems a lot of people wanted a piece of Wolverine in New York City.
Hugh Jackman was mobbed by fans in Midtown Manhattan as he exited a rehearsal for his one-man show at Radio City Music Hall. The actor kept it friendly, signing autographs and posing for selfies, but when the crowds kept coming, the Marvel star jumped into a random car passing by.
Hey there, brother. Where are you going?
He made his getaway, stunning the driver and other occupants inside. Deborah Rodriguez, CBS News, New York.
Indiana's Game 6 win over Oklahoma City last night sets up a seventh and deciding game for the NBA titles Sunday night. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Time for the last-ditch attempt. Welcome to the Friday edition of Balance of Power. As Iran's foreign minister meets with European leaders today in Geneva after President Trump set the clock ticking on a 2-week deadline on finding a diplomatic solution with Iran. We're going to get the latest ahead from Bloomberg White House correspondent Josh Wingrove. The bird bath begins in the Senate as the parliamentarian scrutinizes the president's big, beautiful bill. We'll find out what might not make the cut with Bloomberg's Eric Wasson covering Congress for us. Analysis today from our political panel. Bloomberg Politics contributor, Republican strategist Rick Davis is here alongside Democratic strategist Matt Bennett at Third Way. We've got a good hour ahead with a lot to talk about. We start this Friday with Wall Street. As always, Charlie Pellet has the markets from world headquarters in New York. Charlie.
Thank you very much, Joe Matthew. Looking at a down day on the S&P, giving up earlier gains, an up day for the Dow, and a down day right now for the NASDAQ Composite Index. Stock market experiencing instability due to a slide in chip makers and the expiration of options, with the S&P 500 losing steam. The Philadelphia Stock Exchange Semiconductor Index down 0.9%. S&P right now lower by 9 at 59.71. Drop there of 0.2%. Going to be very interesting to see how things shake out at the close and whether we close above or below 6,000. The Dow up 52, up 0.1%, and NASDAQ right now down 0.4%, lower by 82 points. The 10-year 4.38%, with the 2-year 3.90%. Gold little changed on the day at $33.69 the ounce, down by about $1.50 right now. West Texas Intermediate crude little change, $75.19 a barrel. WTI up by about 0.1%. So we are seeing volatility on this Friday. Brian Levitt is global market strategist at Invesco.
I think these markets are incredibly hard to time. So each time over this year that we've thought it's the worst possible moment to take risks, something has come along that has alleviated some of the policy or political uncertainty that has persisted. I mean, we probably could have asked the same question a couple of days after Liberation Day as well.
Brian Levitt of Invesco, again recapping S&P down 10, drop there of 0.2%. American and European airlines have begun pausing flights to destinations in the Persian Gulf as Israel's conflict with Iran enters its second week, and the U.S. mulls joining the attacks on Iranian nuclear sites. Right now, we've got American airline shares up 0.1%. UAL, parent of United, lower by 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie. Thank you, sir. The Friday edition, I want to say the Monday edition. It's a Friday that feels like a Monday, right? I didn't know what to do with myself. This morning, I got on the line with producer James to map out the show, and I actually wasn't sure. Washington, D.C. is pretty close to empty, though. This feels kind of like a long weekend, and we're in a bit of a news limbo when it comes to everything from Iran, geopolitics, to reconciliation, the bird bath, and all the rest that's happening here in the nation's capital. We've got our eyes on the president. He's here for a little bit longer before he takes off for the weekend, and I hope you managed to get some downtime yesterday. Welcome to, yes, it is the Friday edition of Balance of Power on Bloomberg Radio, satellite radio, channel 121. We're live on Bloomberg Originals and also, yes, on YouTube. Find us now by searching Bloomberg Business News Live. I'll tell you about the podcast later. So we've got 2 weeks. That's the deal. How come it's always 2 weeks? President Trump announcing over the holiday that he is apparently not about to strike Fordo, to start putting American B-2s in the air, to join Israel offensively against Iran. He's going to let this breathe for 2 weeks. Here's Caroline Levitt yesterday.
If the U.S. were to take some type of military action, would the president go to Congress to seek war authority?
I'm not going to engage in hypotheticals. I gave you the statement from the president. He'll make a decision within 2 weeks.
As we said, 2 weeks. It is curious, though. Why is it always 2 weeks? Sean McGreish in the New York Times writing efficiently today. Tax plans, healthcare policies, evidence of conspiracy theories he claimed were true, the fight against ISIS, the opening of some coal mines, infrastructure plans, all were at one point riddles he promised to solve for the public in about 2 weeks. He writes with President Trump, 2 weeks sometimes can be kind of nebulous. After a conversation with Steve Bannon, Josh Wingrove has waited 2 weeks for a lot of things, including a health care plan. As someone who's covered this White House, and he's with us now, Bloomberg's senior White House correspondent. Nice to see you.
Thank you for having me.
It does feel like a Monday kind of, right?
Black Friday almost scenario.
Good to see you. The president wants 2 weeks of our time. Will he use it, or could this come at any moment?
When he says 2 weeks, that historically means that we're not, right around the corner from something. It is absolutely his go-to sort of pressure valve number. But it's significant, I think, because we were this week, fielding questions more broadly about how imminent something could be.
Are the jets in the air?
Right. Like if he decided to go, would it be imminent? So it seems like they're sending the signals that they're backing off. And there's a couple of reasons for that. One is that there's that meeting between the so-called E3, the Europeans basically, and the Iranians set for today. It seems like the Americans are giving that a little bit of room to breathe. And President Trump is sort of living in the gray a little bit on this. He does not want to get bogged down on the question of when or how they would intervene. And the lines that he's drawn in the Senate, as you know, are, full, they can't have a nuclear weapon, but also that he wants full surrender. And we haven't heard him say that in a little bit. That's a tricky one, and a lot of analysts are worried about that. He's not really giving an off-ramp to Iran here.
Unconditional surrender.
Right. So we're going to be watching closely for that, but it looks like they're buying time.
I want to ask you about this E3 meeting today, but first, with what's already happened, because Steve Bannon was at the White House yesterday. They had lunch together. Apparently, he was there for some time. We know how Steve Bannon feels about this. We know about the MAGA split. If you haven't seen the Tucker Carlson interview with Ted Cruz, you're missing a lot.
Yeah.
Is that what turned the ship here?
I don't think so, or at least not one thing. Trump has been speaking to both sides of the camp, and you're right that this is dividing the Republican Party and the conservative movement more broadly. The one camp being sort of that America first means not getting involved in the Middle East unless you absolutely have to, and wary of another forever war, that kind of thing. And then the other camp, which Trump has identified with publicly in the last days, is more like Middle East, or America first means whatever Trump wants it to mean, and that American safety is directly tied to the question of whether Iran will have a nuclear weapon or not. So you've had genuine sort of like camps split up publicly in a way that we really haven't seen very much on very many issues under this Trump's second term. So, where this lands, we will see. We've asked President Trump, a dozen different ways on that flight back from the G7 earlier this week about this. He really did not want to get drawn in to the question of will he strike, will they not strike, are they, giving permission to the Israelis for what's happening now? These are all questions that he's sidestepped. And of course, the core question is, will American B-2s get in the air with these MOP bombs, these MOP bombs, to hit Fordo, or try to hit Fordo, hit that one main sort of bunker? And right now it's just unclear.
Well, you wonder if the reporting got a bit ahead of itself, that he had approved battle plans. It was just a question of when. He was telling people he was going in. Or was there a turn after having a conversation with somebody like Steve Bannon? It's difficult to get in the man's head, of course, but you wonder if Donald Trump himself wanted to go, or if he's buying this 2 weeks for his MAGA skeptics to show he did everything he could.
I mean, let's look at things that have happened this week. We had a TikTok deadline punted by 90 days, again, for the second time. We had a U.S. Steel deal close. Barely a headline on that, by the way. I felt like in the broader press. That Trump campaigned against vociferously and then came around on and is now closed. Nippon Steel of Japan now owns U.S. Steel. And so Trump punts things all the time, and he goes right up to the edge to get leverage all the time. It is certainly possible that that is on the table as to what's happening now, as opposed to him, doing a 2-week punt to, like, performatively weigh both options, but having made a decision. There's really not a lot of sign publicly or in the reporting that Trump has made a decision, and it's just a matter of time. The reporting is that he's still weighing in, including from Trump himself.
Front of the Drudge Report today is Trump tacos for 2 weeks.
Everyone's going to say he tacos whenever he delays anything.
I guess that's the world we're in.
But we'll see. I mean, if is it chickening out to not launch a strike?
War?
I mean, like, I think we should be careful around our language on that. You know, but we'll see. We'll see. And the clock is ticking. I should note in a couple of weeks is that we talk about the taco phrase stems from tariffs.
Correct.
We're a couple of weeks away.
July 9th?
Right. Maybe a few weeks away. July 9th is the ticking tariff deadline for a lot of countries. There's one a little bit later. He set a vague 30-day deadline with the Canadians at the G7, by the way, and the China deadline is in August. So there's a lot of ticking clocks right now on this, and we'll see. But it's the huge question right now.
What happens today in Geneva? You've got Iran's foreign minister, leaders of Britain, France, Germany, the E3. If you want to sound smart at the cocktail parties. Do they think that Donald Trump...
be alone at the cocktail party?
Well, maybe.
Hey, let me tell you about the E3.
Listen.
Clear out a room.
I've seen you at embassies.
Yeah.
What happens that Donald Trump would take seriously? We know how he feels about these European leaders. He left them all alone at the G7. Is this going to lead to anything that the White House would consider credible?
If he can brand it as them not having a nuclear weapon and them, quote-unquote, surrendering, then sure.
And he can still take credit for it?
Again, let's take that U.S. Steel example again. He's talking about American ownership of U.S. Steel and selling that deal. He had a rally celebrating the sale of that company to the Japanese company.
Remarkable.
Under the framing of American control. And there are provisions for American control, but like President Trump has never been shy to brand something.
Yes, right.
So I do think that there's a lot of elbow room here. If Iran and the Europeans get to something that Trump himself can, agree with, I think he can rhetorically.
Is he convinced that these B-2s can actually get the job done in Fordo? There's been some reporting about whether he's skeptical of that. And does this 2 weeks also give Benjamin Netanyahu a chance to actually send people down there? This has been discussed as well. That's special forces under the mountain.
That's a good question, and I invite you to do what I do and ask our friends Nick Wadhams and Tony Capaccio.
Yeah, we might do that later.
McBride about that. But I think the Bibi question is an interesting one here, because one thing that has not happened in the let's say reflection period that Trump has been on in the last several days is any sort of public signal for Israel to hold it or ease off or anything. Trump has not only left unclear what he will do with respect to Iran, but he's also given no signal that he's trying to clip the wings of the Israelis and what they are doing.
Sure.
So right now, that blank check seems to still be there.
And they could do a lot in the next 2 weeks, I suspect.
Yeah, of course they can, yeah.
Josh Wingrove, Bloomberg senior White House reporter with us here at the desk. What a treat to have you in the Bureau and back in the United States of America. I hope you have a great weekend, and thank you for the insights.
We'll see you at the NATO summit next week.
As always. Are you heading there? Will you join us from the NATO summit?
It'd be my pleasure.
It's going to be quite the conversation, and I hope that's the case.
Between my steak frite and what have you, what can you get in Europe?
This sounds really great, actually. Let me know how that goes. The great Josh Wingrove. I'm Joe Matthew in Washington. Thank you for being with us here on the Friday edition of Balance of Power. We've got a lot more straight ahead, only on Bloomberg Radio.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. A fresh bout of volatility gripping the stock market amid a slide in chip makers, and as a pile of options expiring today threaten to trigger sudden price swings. Treasuries pared losses as Fed Governor Christopher Waller said rates could drop as early as July. Right now, the S&P is at 5970, down 10, a drop of 0.2%. The Dow up 50, a gain there of 0.1%, while NASDAQ is down 84 for the NASDAQ Composite Index down 0.4%. 10-year 4.37% with the 2-year 3.89%. Gold little changed at $33.69 the ounce, down less than 0.1%. And West Texas Intermediate crude holding at $75.10 a barrel, down by 0.1%. The American College of Cardiology is recommending that weight loss drugs be used earlier to prevent heart disease, particularly for obese patients, as exercise and diet may not be enough. Shares of Novo Nordisk, they're down now by 1%. Eli Lilly down by 3.1%. Recapping, the S&P down 10, a drop of 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. Balance of Power continues right now. Back, we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. Great to see Charlie Pellet every day here on the fastest show in politics. We've got, of course, the Amtrak corridor covered here, straddling Washington and Wall Street every day. In fact, we're going to dig a bit further into the market's view of what's happening here in Washington, knowing that the stakes are high right now when it comes to geopolitics and when it comes to the president's reconciliation plan with the debt and deficit in mind. Eric Weiner is going to join us from our markets team a little bit later on as we turn our attention to Capitol Hill, because this is actually a pretty important period of time here. There's not much going on in Washington. You can park wherever you want in town today. It looks like everybody decided to make it a long weekend, but there are some senators who are still here to endure the bird bath. It's actually starting here. You hear about the Byrd rule. This goes back to the late Senator Byrd, who had a piece of legislation that set out the rules for reconciliation. That's what this whole big, beautiful bill thing is, right? Avoiding the filibuster in the Senate, but it's got to be about budgetary matters. So if you try to put like a new border policy in there, it might not survive the bird bath. It then becomes bird droppings. The parliamentarian is the person who makes that decision in the Senate. Democrats are ready to throw the whole bill at the parliamentarian, beginning with the mother of all items in this bill. We've talked about it before, and that's the current baseline. This is the accounting method that Republicans have used essentially to say that this is flat spending, that it's a continuation of the Trump tax cuts, not a whole other multi-trillion-dollar dump into the deficit and the debt. Eric Wasson covers this whole process every day and has a pretty good sense of what might end up on the cutting room floor. He joins us right now, Bloomberg congressional reporter. Eric, it's great to see you. You've been through a couple bird baths before. This is the big one here. What's the parliamentarian going to do with the current baseline?
Well, you know, there was a budget outline that passed the Senate, and she did allow that to contain the current policy baseline. So the budget went forward. But she's not ruled on whether this can be used to enforce another part of the Byrd regulations, which is that you can't add to the deficit after 10 years. So what yardstick do you use? If you can't use the current policy baseline, everyone I talk to believes this bill does violate that. It does add to the deficit under current law because you're just, renewing these Trump tax cuts that would otherwise have expired. She hasn't ruled on that. So it will be up to the Senate itself to adjudicate that. I think of the things that the Senate may overrule the parliamentarian or bypass her, this is the one that's most likely. It's core to the bill. The main reason that Republicans don't overrule the parliamentarian is they're worried about sort of vitiating the filibuster. In other words, if you allow everything from financial policy to immigration policy to abortion policy in this bill, then you basically create a huge backdoor and the filibuster doesn't really exist anymore. And they want that filibuster there when they're in the minority and try to oppose Democratic initiatives. So basically, I think what's going to come down to is this will come before the Senate, and J.D. Vance or who's ever sitting in the chair will simply say this is kosher. There may or may not be some further votes on that, but I think it's going to stay because this is core to the bill. The bill can't survive without this baseline.
Fascinating. Democrats have plans to challenge apparently about 60 provisions inside the bill, specifically the Senate Finance Committee's portion of this. That's where all the controversial stuff is when it comes to taxes and Medicaid. Is this just a lot of noise? We stay up all night with a big votorama, or could they actually make some meaningful changes here?
You know, they've already made some big progress. I think some of our subscribers, especially those at the Federal Reserve, really care about. There was an attempt to slash Federal Reserve employee pay. Basically, Republicans think that they're paid too much of a premium above regular Treasury employees, and they wanted to bring them down to that schedule. That was ruled ineligible. That's out of the bill now. There was also an attempt to zero out the Consumer Financial Protection Bureau. This is a longtime target of the GOP. There is an attempt to do mass layoffs at the agency, and that's been put on pause by the courts. But this was an attempt to just zero out their funding, and the parliamentarian base says, no, that's policy. You're going to need 60 votes to get rid of this agency. You can't just backdoor it through this. There were some Environmental Protection Agency emission standards as well for motor vehicles that were struck in. So they've already had some success. Big ones that they're looking at, there's gun regulations in this bill, a deregulation of short barrel shotguns and silencers, a big goal of the gun advocates. That probably will be stricken out, in my view, just based on experience. There's also an attempt to stop states from regulating AI. And that's a bit controversial. It takes away their broadband funding if they do regulate AI, but that probably will be stricken as well.
Fascinating. So the silencers come out. The AI component was one of the most controversial things at the end there. Eric, we were all asking lawmakers where they fell on this, and it may not end up in the final version, which is fascinating. The Democratic staffers are meeting with the parliamentarian today. What goes on in these sessions? Are they arguing over stuff? Are they just kind of presenting their notes that the parliamentarian then takes away to consider? How does it go?
I do think it's a bit like an arbitration. Both sides do get their hearing, and then they do get a ruling. Sometimes the rulings come out, apparently last night, very late. We got a press release 1 minute to midnight or so, on this CFPB ruling. Sunday, I think there's going to be a lot of activity on all of this. It's very much, she's a lawyer. They're all pretty much lawyers. There are a lot of faces that we see circulating around this, people who've been former parliamentarians weighing in. It's a very specialized set of knowledge, but the main criteria is it primarily budgetary nature? Is the real purpose of this provision to get the revenue up or down, to get the spending up or down, or is there a hidden or not so hidden policy objective? And that's pretty much the criteria that she goes on. And of course, just it's a kind of very specialized, almost like you've got sports fandom. Like some people say, okay, she gives one to Democrats, she gives one to Republicans, a lot of mind reading going on. But in the end of the day, I think the operative thing is that Thune told us, as the majority leader in the Senate, he's not in the business or very interested in really overruling her on all this stuff. There's probably some pressure from people in the White House that just don't like institutions, don't like guardrails. But I think Thune's a bit of an institutionalist. He certainly spent his time in the minority arguing the Democrats shouldn't get rid of the filibuster. And he's so far holding to that. And as long as he does, they're going to go with what the parliamentarian says.
You must be thinking, President Trump, don't make me overrule the parliamentarian. Eric, what's your thought on timeline? Before they adjourned this week, Republicans in the Senate said they're still looking for a midweek vote. Is that real next week? Or is that too ambitious?
I think it's very, very ambitious. It could be real. What we were reporting on the other day before the Juneteenth holiday, there's an attempt. One of the key problems here in the bill is Medicaid provider taxes. It's basically a gimmick that states use to up their federal reimbursement. Now, this is apparently crucial to a lot of rural and teaching hospitals, keeping them afloat. So this has drawn fire from the likes of Josh Hawley, Susan Collins, across the spectrum here. For some states that use this, which really is an accounting gimmick, to up the reimbursement. So there was an attempt to sort of create a fund, you could call it a slush fund, an emergency fund for hospitals to access. We're kind of following up on this. There may be other ways that may be declining in popularity, according to some reports from our colleagues at BGov. But they got to basically get these guys on board. If they can get these guys on board, deal with the SALT issue, which we've talked a lot about, dealing with the House demand for $40,000 cap, the Senate has $10,000 cap, then they could possibly roll some of the conservatives. You have Ron Johnson, who's calling for $5 trillion in cuts. It's such a high ask that it kind of puts you out. I asked about Rand Paul. I went up to Thune the other day and said, "Are you going to flip him?" He says, "Has hell frozen over?" So I think they've pretty much written him off. He doesn't want any debt ceiling increase in here.
Well, I'm running out of time, Eric, but I follow up with us on that provider tax. It's something that we've talked about a lot with regard to local hospitals and nursing homes. Eric Wasson, it's great to have you setting the table here on what could be an important weekend when it comes to the future of this bill. He covers Congress for us here. Eric Wasson with a great job on the latest. I'm looking at this market. I'm really glad that Eric Weiner can join us. Bloomberg senior editor for equities is live in New York as we walk through this a little bit together. Look, the Dow is not down 1,000 points today. The S&P 500 is not down 500 points today, despite the uncertainty over everything we just talked about with Eric. Debt and deficits was roiling the bond market along with worries about tariffs. You got a deadline on July 9th. They could all go back into effect, right, following Liberation Day. You have the potential for war with Iran that now we get a 2-week reprieve on. Eric Weiner, I wanted to talk to you because I can't figure out what this market is feeling so confident about. We're whistling past the graveyard on a long list of crises. How do you see it?
Well, there is actually one technical thing going on today, which is the expiration of a bunch of options. It's called tripled witching, which creates massive volume and does weird things to trading. That said, when we started the session, it actually looked like we were going to have a bullish day because you had Trump sort of diminishing what, the immediacy of attacking Iran, and you had a Fed governor coming out and saying we could have rate cuts as soon as July. So it looked like everything was going to actually take off, bizarrely. And then Iran sort of reminded us that we're still in a war. And you used the right word, which is uncertainty, and we're kind of stuck in that environment. If you look at the last 2 weeks in the S&P 500, I think the move is down about 0.2%. Basically, it's gone nowhere. And if you look at Powell's comments on, when was that? Wednesday, he used the word uncertainties, uncertainty 17 different times. And then it was in a bunch of different questions as well. So that's really what traders are dealing with right now. And they're kind of paralyzed. So very small moves.
Really amazing. I think the S&P 500 is still floating around 6,000 with everything that we just mentioned. Hey, Eric, let's spend more time together. It's good to see you, and I appreciate your view on the markets. We'd love to have you back. Bloomberg senior editor for equities, live at World Headquarters in New York. We'll get an update on the markets a little bit more in depth with Charlie Pellet coming up a few moments from now, and we're going to assemble our political panel. What in the world happened in Los Angeles over the weekend? Did you see this? Dodger Stadium? DHS in the parking lot wearing masks. The team didn't like this. We'll see what the panel thinks about it with the latest on an important court ruling when it comes to the deployment of troops in American cities. It's straight ahead on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The S&P 500 index remains lower. We've got the Dow higher while NASDAQ is in the red. NASDAQ down 62 right now, drop there of 0.3%. S&P little change, down 2 points, but below 6,059.78. The Dow up 109 now, up by about 0.3%. A fresh bout of volatility gripping the stock market amid a slide in chip makers, and as a pile of options expiring today threaten to trigger sudden price swings. The 10-year 4.37% with the 2-year at 3.89%. Spot gold little changed, up $1.50 the ounce, up under 0.1%, 33.72. And West Texas Intermediate crude oil 75 even a barrel, down now by 0.2%. Fed Governor Christopher Waller says the central bank can lower interest rates as soon as next month. His remarks on CNBC follow the decision by Fed policymakers on Wednesday to keep rates on hold. As for the rate cut outlook, Lauren Seidel-Baker is economist at ITR Economics.
We have very fundamental reasons that we are looking through to the second half of this year with higher price levels. That's fundamental, kind of boring, nerdy things like fiscal and monetary policy. We still see upward pressure on wage costs. So at the end of the day, with inflation pressures building, with the labor market still imbalanced, this is not the typical environment that we are talking about rate cuts.
Lauren Seidel-Baker of ITR Economics. Again, crude oil trading lower, down now by 0.2%, 75 a barrel on WTI. We do have oil shares, however, trading higher. ExxonMobil up 0.9%, ADRs of BP, they are gaining less than 0.1%, little change there. Chevron up by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. And back we go to Washington. Balance of Power continues. Once again, your host here is Joe Matthew.
All right, Charlie, many thanks. Live from New York, Charlie Pellet, the voice of Wall Street and the New York subway, always with us here on Balance of Power. Thank you for joining on the Friday edition. It feels strangely like a Monday if you had the thing off yesterday. Of course, that was Juneteenth at the White House, not acknowledged. In fact, a very strange post by President Trump on Juneteenth, instead of putting out a proclamation on the holiday as might be considered normal for an administration, Juneteenth went unmarked by the president. As the New York Times writes, the president brought it to Truth Social. Quote, soon we'll end up having a holiday for every once working day of the year. Strange grammar. It must change if we're going to make America great again, suggesting that we get rid of, quote, non-working holidays, unquote. It does make you wonder if Juneteenth, which of course is a federal holiday, markets were closed yesterday, will survive this second Trump administration. The matter of immigration policy in this White House is, of course, a massive story right now. We had a very important court ruling that you may not have been paying attention to yesterday. You should know about it. Remember, just a couple of weeks ago, before we thought we were on the cusp of war with Iran, we were talking about violence in the streets of L.A., the deployment of National Guard troops by the president around the back of Governor Gavin Newsom. This, of course, has been tied up in court. Active duty Marines were later deployed to federal property in L.A., and a federal appeals court has unanimously ruled that Donald Trump is allowed to retain control of the National Guard in California against the challenge from the governor. On social media, Donald Trump looking to the horizon. Again, Truth Social hailing the decision as a big win, suggesting it would open the door for other such deployments across the United States if law enforcement were unable, for whatever reason, he writes, to get the job done. It's where we start with our political panel today. Rick Davis is with us, Bloomberg Politics contributor, Republican strategist, and partner at Stone Court Capital. And joined today by Matt Bennett, I'm glad to say, Democratic strategist and Executive Vice President, Public Affairs at Third Way. Gentlemen, great to see you. Happy Friday, and thanks for joining us. Rick, are we going to start seeing examples like this in other cities around the country now?
You know, look, I mean, I think that Donald Trump is going to use the power that the Constitution gives him. And nobody debated prior to this instance in California that he didn't have the right to call up the National Guard. Of course, we talked about that ad nauseum after the attack on the Capitol, and why didn't Donald Trump call up the National Guard? I mean, if it was up to the state, the governor of Maryland would have done it. But the reality is, it's almost like the administration wants to provoke a fight, right? And they're targeting blue states to bring the heat of ICE, of Homeland Security, to these deportation initiatives. And so they're going right into the mouth of the beast. Sanctuary states, sanctuary cities, they know they're going to get this pushback, but they also are under enormous pressure to drive deportation. So, you know, it's a cauldron of heat. And in the summertime, heat tends to turn into fire.
Boy, how true. Well put, Rick. It is going to be 100 degrees next week, Matt Bennett. So if you're J.B. Pritzker, if you're Kathy Hochul, if you're Governor Shapiro, what should you be bracing for?
It's not at all clear. I mean, Rick is certainly right, and I think the court probably got it right. They don't like to get involved in the president's duties as commander-in-chief, and his ability to call up the National Guard is clear, but it is also worth noting that this was the first time a president had called out the Guard without the support of the governor of that state since the civil rights era in the 50s. So it's been a while since anyone's done that. And as Rick noted, if he had done it as governors and the mayor were asking him to on January 6th, that would have been with the very strong support of the commanders of those National Guard troops. So will this happen in other places? I think that the White House certainly is spoiling for a fight. They think this is working for them. All of the quotes you saw in the stories about this from White House aides said they thought politically it was good to have the president fighting with the governor of a blue state over immigration enforcement. But I also think it's important to kind of disentangle these two things. This wasn't about immigration enforcement. This was about putting down violent protests, which I think the governor was correct. The 9,000 police officers in Los Angeles were ready to do without the National Guard.
Interesting. Having thought about what Matt just said, Rick, J.D. Vance is reportedly preparing for a trip to Los Angeles this week. This administration is clearly not done trying to seize on the optics around all of this. What's going to come from this trip? And if you were advising this administration as a political operative, what would you be staging for him in L.A.?
Well, it's like what we were talking about a minute ago, Joe. They want to provoke, right? I mean, like in most administrations, they'd look at this and say, hey, let's wait till things simmer down before we go, for whatever reason they want to go. Not this administration. J.D. Vance is going there. He's going to meet with the people on the ground who are doing deportations, who are imposing law and order on these immigration protests. I mean, like he's going to go right in and throw some punches. And it's part of this ongoing campaign, not just to engage Governor Newsom and, sort of take a political stand against his leadership, but also to try to, basically change the tide, a national consensus in states like California and, as you said, Illinois and Massachusetts and others, that these are sanctuary states and we're not going to put up with it and you're going to have to change. And that change will not come soon. This is going to be a fight that'll take a long time, and it's instructive to all of us to understand that this administration is a provocateur, right? They want to cause a fight. Yes. They're not looking for things to settle down. Those troops are there because they have riots, and their view is those troops are going to stay as long as there are riots, and we're going to not do anything to take the foot off the pedal when it comes to provoking those protesters. So I think we're in for a difficult summer. I don't think this is going to be the only state that has these kind of issues. And it's almost like J.D. Vance has been given the mandate to go out and support what Homeland Security is doing, what ICE is doing, and show this administration is not backing down.
That's going to be a moment when you see him. Maybe he'll go to Dodgers Stadium, Matt Bennett. If you see what happened there yesterday, quite remarkable. The team blocked federal immigration agents from accessing Dodger Stadium parking lots yesterday. Now imagine a bunch of pickup trucks roll up and you've got guys with masks on, no uniforms, no visible badges. They're wearing street clothes and they look scary. Immigration and Customs Enforcement denied having agents at the stadium. Department of Homeland Security acknowledging that Customs and Border Protection vehicles were present. If you're with us on YouTube, you see the back and forth on X. Dodgers wrote this morning, ICE agents came to the stadium and requested permission to access the parking lots. They were denied entry. Tonight's game will be played as scheduled. Homeland said the incident, quote, had nothing to do with the Dodgers. Said that their vehicles were in stadium parking lots very briefly, unrelated to any operation or enforcement. ICE called the statement from the Dodgers false. We were never there. I'm really confused. And I don't know what people think was going on. At one point, a reporter went up to the ICE agent or these unmarked agents and said, who are you? They said DHS and would not identify themselves. Did the Dodgers just become an example of something here? Matt, what do you take from this?
The whole thing is so weird. I mean, how do you wander into a giant stadium parking lot unintentionally? None of it makes any sense. The answer is we don't know. The Dodgers happen to own a huge piece of property, and they, as property owners, had the right to kick those guys out. But I think the bigger thing is the thing you flagged, which is the way they're going about immigration enforcement is really scary. They are not, in many cases, not in uniform. They do not identify themselves. They are wearing masks. They're heavily armed. They're grabbing people off the streets, in some cases in front of their children. This is not the way law enforcement is supposed to work in the United States. Law enforcement is supposed to be clearly designated by their uniforms. They're supposed to tell you who they are and what they're doing and where they're taking the people that they're taking. So this feels very un-American and very authoritarian. And that's in part the thing that I think a lot of Democrats are responding to. And by the way, while the Trump enforcement efforts are broadly popular, that kind of thing, the militarization and the no markings and the thuggery, that's not popular.
Well, the team's getting some pressure to do something here. There is an expectation the teams, and if maybe they have already, were to announce plans to assist immigrant communities. They don't want to be in the middle of all of this. They're trying to sell tickets to games. Rick, what do you make of this, though? I mean, if you see these guys roll into a parking lot, they could be the Proud Boys for crying out loud. They've got a pickup truck. You don't see a badge. To what extent is all of this legal and effective?
Yeah, well, I think, the courts are going to tell us ultimately what's legal. I think there's a lot of extracurricular activity going on around the country with these kinds of sort of pseudo-militant groups who have decided to take this on for themselves. Have been already examples of non-law enforcement, non-federal agents getting into the act of rolling up people they assume are undocumented and don't seem to be trying very hard to identify those people in the time they harass them. So, look, we're in a tough environment, and Matt's right. I mean, like, we are all about law enforcement. We want law enforcement to work in this country. We are a country of laws. That's why our cars for cops are painted explicitly with the identifications that they have. That's why uniforms are a must with our agents. Sure, there are undercover people working to preserve law and order in our country, but not in the context of rolling up folks for deportation in, black minivans with no markings on them. This is not the United States. And if there's one thing I know about the American public, and it's reinforced over and over and over again in all the survey data, is we are a country of fairness. We want a fair fight. We want a fair chance. And when we see those tables being turned to the point where there is unfair activity occurring in these jurisdictions as it relates to these kinds of things, families are being treated poorly, they will react negatively. And at the end of the day, the biggest check on power in the United States is with voters. And the president is playing with fire if he doesn't think these kinds of tactics aren't going to be punished come midterm elections. And we all watch the House of Representatives being so close. 3 members alone will flip the power. But there are a lot of senators I know from Republican states who are starting to worry about what impact all this is going to have on their reelections.
Wow, really smart analysis from both Rick Davis and Matt Bennett. A great panel and a great conversation. Remembering, of course, Donald Trump doesn't want masks on protesters. And there are a lot of questions right now about why there are masks on law enforcement, particularly when they're not identifying themselves. Rick and Matt will be back in hour 2 of Balance of Power with a lot more to talk about. We need to get to geopolitics and the standoff with Iran that continues to this moment. 2 weeks, says President Trump, to find a diplomatic solution. And we've got some smart voices ahead in our second hour, including the former U.S. ambassador to Israel, Dan Kurtzer. Stay with us right here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
A last-ditch attempt at diplomacy. Welcome to the Friday edition of Balance of Power as Iran's foreign minister meets with European leaders in Geneva after President Trump allowed 2 weeks for a diplomatic solution with Iran. We're going to get the latest for you straight ahead from Bloomberg's Nick Wadhams with insights today from Dan Kurtzer, the former U.S. ambassador to Israel. Analysis this hour from our political panel. Bloomberg Politics contributor, Republican strategist Rick Davis is with us, along with Democratic strategist Matt Bennett at Third Way. It's all after a look at Wall Street. Back to it today, the Friday trade with Charlie Pellet at World Headquarters in New York. Charlie, what do you have for us?
Right now, we are looking at a down day on the S&P 500 index, an up day for the Dow. Joe Matthew up by 0.2%. NASDAQ in the red, down 65, a decline there of just about 0.3%. A fresh bout of instability gripping the stock market amid a slide in chip makers, and as a pile of options expiring today threaten to trigger sudden price swings. Treasuries paired losses as Fed Governor Christopher Waller said rates could drop as early as July. We've got the 10-year at 4.37%. The 2-year is currently yielding 3.89%. Spot gold little changed on the day, up 70 cents to $33.71 the ounce. West Texas Intermediate crude oil down 0.3%, $74.95 a barrel on WTI. Bitcoin, meanwhile, trading lower by 0.5%, 103,690 on Bitcoin. Do want to pass along a headline that we just got from Meta Platforms. Meta had acquisition talks with Perplexity before that Scale deal. Meta Platforms shares, they're down now by just about 0.8%. American and European airlines have begun pausing flights to destinations in the Persian Gulf as Israel's conflict with Iran enters its second week, and the U.S. mulls joining the attacks on Iranian nuclear sites. Shares of American Airlines up 0.3%. United Airlines Holdings, that stock down by 0.1%. Again, recapping, S&P 500 index now flat on the day. Balance of power continues right now, and back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, great to see you. Live from New York, Charlie Pellet on the markets. We'll get back with Charlie on the Friday trade a bit later on this hour as we get back to business here on Balance of Power, here on Bloomberg TV and radio, live on YouTube and Bloomberg Originals as well. Thanks for joining us as we look for the way forward here when it comes to Iran, along with a couple of other issues. But this is the story we're going to stick with as an important meeting gets underway today in Geneva with Iran's foreign minister, and we're now calling the E3, the leaders of Britain, France, and Germany, all after yesterday's revelation by President Trump that we now have 2 weeks of breathing room to find a diplomatic solution. There were questions when we last spoke on Wednesday, of course, about whether a U.S. strike against Iran was imminent. We heard from the White House Press Secretary Caroline Leavitt yesterday on this. 2 weeks it is.
If the U.S. were to take some type of military action, would the president go to Congress to seek war authority?
I'm not going to engage in hypotheticals. I gave you the statement from the president. He'll make a decision within 2 weeks.
Simple as that, as we bring in Nick Wadhams on the conversation, who leads our national security team here in Washington. Nick, it's great to see you. This has been a pretty interesting process, and now we've got a meeting underway with the chance for a diplomatic solution. It's unclear what exactly motivated President Trump to allow for the 2 weeks, but when you hear from Iran's foreign minister actually making tracks to Geneva, what does that tell us?
It could tell us a lot, or it could tell us nothing. I mean, I think the thing that's really interesting from the Caroline Leavitt statement is she says within 2 weeks, and it's like, well, if you start to actually parse that, it's like, well, what does that mean? I mean, the interpretation had been, okay, they're giving us a 2 week reprieve. But then she's saying within, which means it really could happen at any time. So it does give the president a little breathing room, because there had been, as we and many others have reported, the conventional wisdom was that these strikes were going to happen this weekend, and a lot of anticipation for that. She now seems to be broadening out the time horizon. What does seem clear is the president has not made a final decision. But the issue of the Iranian foreign minister meeting the Europeans, in some ways, I see that as almost as like a last ditch effort. But the president has been very dismissive of European efforts in large part. He really wants this to be a U.S.-Iran conversation. So it's not clear to me what Iran could say in that meeting that would persuade him to hold off.
So he may not find that a deal with the Europeans is credible to begin with. He just left them in Canada to think about it. You were there, as a matter of fact. But interesting to hear from the UK Foreign Minister David Lammy on X. He wrote, "The situation in the Middle East remains perilous." And this is following a meeting with Marco Rubio and Steve Witkoff. He writes, "We're determined that Iran must never have a nuclear weapon." Meeting with Rubio and Witkoff at the White House today, we discussed how a deal could avoid a deepening conflict. A window now exists within the next 2 weeks to achieve a diplomatic solution. Is it his job to express that kind of optimism, or was there a feeling in the room that we might have avoided a war?
I think what you're seeing here is officials from everywhere, whether it's the U.S. and non-officials like Steve Bannon or Tucker Carlson, and now the U.K. and others, basically trying to triangulate and get messages to Trump. I mean, whenever we talk to people about, well, what is he going to do? Will he, won't he? The response is always, it really depends on who the last person was he spoke to. So this is the sort of infamous or famous way that Trump does business. He has a lot of ideas, but then it often comes down to who got to him last. So I think what you're seeing from the UK there is, in some ways, the government in the UK has tried to play the role of not necessarily peacemaker, but hey, let's take a breath here. Keir Starmer, the prime minister, said a couple days ago he believed the president was not going to attack. Now you have this nascent effort by the Europeans. Okay, let's just take a breath. Let's have this little window. Let's see if we can get something done. But the president himself has said, you know, essentially that it was too late. Iran had 60 days, and that's what led to this Israeli strike. Counter that against the idea of him as the deal maker. There's no one who wants a deal more than Donald Trump wants a deal. He would love to get a deal here. The question is there anything that Iran can say now that is going to satisfy him and make him say, okay, I mean, a meeting with the Europeans right now, I'm not really sure what Iran could do short of saying, okay, we are going to give up all of our aspirations for a nuclear, which, you know, they're probably not going to do.
Okay, so we have 2 weeks. The conventional wisdom on Wednesday was you need B-2 bombers with these MOP bombs to get to Fordow and the sensitive enrichment facility under a mountain in Israel. Now there's this idea, well, what if Benjamin Netanyahu has 2 weeks and he might actually send special forces inside that complex? Donald Trump doesn't need to put Americans in harm's way. Is he allowing for that possibility?
Yeah, I think so. I mean, you can imagine what the conversations look like in the White House as the president says, okay, what are my options? What's the best case scenario? What's the worst case scenario? I mean, yes, they have air dominance, but there is still a potential risk that a U.S. plane could get shot down. U.S. service members' lives could be lost. Obviously, the question of, okay, if you do this strike from this bomb, we believe it would have a devastating impact. It might not have a devastating impact. We don't know. This weapon is largely unproven in a situation like this. So no guarantee that it would have the effect the U.S. wants it to have. Suddenly the U.S., the administration is pulled deeper into this conflict. What if then U.S. bases are attacked? So he's getting advice from a lot of folks who say, oh yeah, just go in, drop the 30,000-pound bomb, done, dusted, we're good to go, American involvement over. Yeah. He's also presumably getting a lot of information from folks who say high risk, potentially low reward. And then the Israelis have said publicly, we have plenty of options here. You know, there are other ways of doing this, special forces being one of them. So obviously difficult to get inside the president's head, but you can be sure he's getting a lot of very different information.
A lot of worries about the day after, as they call it.
Day after,
what would Iran do to strike back, forcing continued U.S. involvement? Or what would happen if an American aircrew were shot down?
And it goes against everything the president campaigned on. I mean, yes, peace through strength, that's a big one. But, you know, he billed himself as the peace president. I mean, I cannot tell you the number of times I sat through campaign rallies and also conversations with his advisors. No new wars in the first term. Suddenly the president is potentially going to war with Iran. I mean, that's really going to undercut the message he has sent and a lot of the support he gets from the MAGA base.
Yeah, it's not lost on us that Steve Bannon had lunch at the White House yesterday. Nick, great to see you. Nick Wadhams, Bloomberg's national security team leader, with us here in Washington. As we read the tea leaves with 2 weeks out, or maybe less, as Nick identified, the language here, the semantics are important. Within 2 weeks is what the press secretary said. We had the voice of experience in Dan Kurtzer, now with Princeton University, where he's professor of Middle East policy, is former U.S. ambassador to Israel and has been in the room for talks like the ones we're describing today in Geneva. Mr. Ambassador, welcome back to Bloomberg TV and radio. It's great to have you. Do you share the optimism of the UK foreign minister when it comes to these talks today in Geneva?
Well, there's no basis to be optimistic unless they've heard something from the Iranians that they'll communicate to the president. What they need to hear, and what the president would need to hear, is that the Iranians are ready to come back to the talks and understand that they will have to give up enrichment on Iranian soil. If the Europeans can produce that kind of a commitment, then the president can talk to Netanyahu about holding up a little bit and giving diplomacy a chance. But otherwise, aspirations are nice, but we're really far down the road beyond simply hope.
Well, you hear the phrase unfettered access, and it brings you back to the nuclear deal with Iran and to years long before that, and even to Iraq. You remember how this goes with weapons inspectors, and it's typically not to meet expectations. With Iran, they've turned back on a number of promises before. Why would this time be any different?
Well, the reality is that in 2015, with the Joint Comprehensive Plan of Action, for 3 years, the Iranians adhered to that agreement. And each time a small violation was uncovered, it was fixed right away. So there is at least a small track record of Iranian compliance, which of course ended when the United States pulled out of the JCPOA. Now, I think that we would need a much stronger JCPOA 2.0. We'd have to have no end date. You remember the JCPOA was supposed to come to an end within 12 to 15 years. So no end date, better assurances with regard to the reconstitution of the program. But, a tougher agreement could lead to Iranian compliance, an end of the war, and therefore an end of the Iranian nuclear program.
Is Iran more or less likely to agree to stop enriching uranium as it is being bombed by Israel? Is this maximum pressure campaign the type of thing that works in this scenario, or moves Iran further away from an agreement like that?
Well, it's a great question, and the answer is unknown. Before the Israeli bombing, Iran was stuck on the idea that it would not give up the right to enrich uranium. So we don't know whether the debilitation of Iran's military capabilities, its missile program, and its nuclear program will now make a convincing argument otherwise. I think much of this is going to depend on what's happening within the opaque system in Tehran. The Ayatollah still is calling the shots, but there are quite a few different factions playing in this, including more extreme elements in the Iranian Revolutionary Guards and the so-called Basij, who have argued for years that Iran should simply develop a nuclear weapon. So they will be pressing for that. Others might say, look, we invested a lot, we lost a lot, we have no allies in the region, and it's time to give it up.
There's been some interesting reporting on U.S. intelligence estimates when it comes to Iran's ability to and motivation to make a nuclear weapon. We are frequently not on the same page as Israel when it comes to this, Ambassador, and I wonder your thoughts about the assessment we're reading about today that Iran has yet to decide whether to make a nuclear bomb, even though it does in fact have a large stockpile of enriched uranium. The idea is that it would be more likely to shift toward producing a bomb if the U.S. decides to get involved offensively with Israel. Do you believe that to be true?
Well, our intelligence community has been consistent since 2003 in saying that Iran is not trying to weaponize the capability of using a nuclear weapon. And that was something that Tulsi Gabbard back in, I guess it was March, April, testified to Congress. And it's something that the president simply said he didn't agree with, even though it's his intelligence people telling him that. So you have to distinguish between the weaponization program, which appears not to be in place, as opposed to the preparatory steps that Iran has been taking and accelerating since 2018, since we pulled out of the JCPOA, and they started enriching at a much higher level, up to 60%. And there's some indication that at least at one point they went beyond 60%, which would bring them very, very close to being a threshold nuclear state with a breakout time that's essentially days, not even weeks. So they're prepared, I think, to move expeditiously. Their capabilities are much less today as a result of Israeli bombing. Question is, how do you make sure that what Israel accomplished militarily is sustainable and that Iran cannot reconstitute its program?
So, Ambassador, what do you expect to take place then in the next 2 weeks? And if the U.S. managed to strike a deal with Iran, would Israel trust it?
Well, what I expect to take place is a lot of back-channel conversations. We know that the president's envoy, Stephen Witkoff, has tried to reach out to the Iranians. We now have this European meeting. There's going to be a lot of chatter behind the scenes, and I think the president will factor that into the equation. Are the Iranians really ready as a result of having been bruised? Are they really ready to come to the table and give up enrichment, which would make a JCPOA 2.0 possible? Whether Netanyahu would be satisfied with that? Look, as far as the Israelis are concerned, unless Fordow is taken out, the heavily fortified underground facility, they think their job won't be done. As Nick suggested, there may be other ways of doing it besides simply B-2 bombing. You knock out the electricity, the entrances, the air supply, and you keep at it for a while. So you're going to see, I think, in these 2 weeks, back-channel contacts, sustained Israeli attacks, including against Fordow, and within that 2-week period, whether the president can put this all together in a diplomatic package is literally anyone's guess at this point.
Wow. Wouldn't want to be a worker at Fordow right now. Ambassador, we just ran a headline across the terminal. The Iran-European nuclear talks in Geneva have come to an end. We are standing by for a statement. As we wait for a readout, and in our final moment here together, Ambassador, where's Russia and China on this? Or are we learning right now that they have no influence on what's happening?
Well, they certainly have little influence. The Chinese are heavily dependent on Iran's oil and gas, and therefore they're concerned whether this war escalates and whether attacks against the energy infrastructure take place, or whether Iran, in response, blocks the Straits of Hormuz. So the Chinese are nervous. The Russians are incapacitated because of their own war. But nonetheless, it would behoove the president to think about including them in any multilateral diplomatic approach. After all, it was the Russians, Chinese, and the 3 Europeans who joined us in 2015 to make the JCPOA work at that time. So they're not going to be major players in this, but they'll be important players if Iran sees that not just the Europeans and the Americans, but also their friends in Moscow and Beijing are telling them it's time to call it quits.
Great to have you with us, sir. Dan Kurtzer, former U.S. ambassador to Israel, now at Princeton, with us here on Balance of Power. This is Bloomberg.